one's for my number one fan. Tracks. Velvet in the building, baby. Let's count it up. Payday Friday, yeah. Money printer singing like Sinatra on tour. I'm the glitch in the system, Wall Street soar. Come on. Every candle I touch turns green like slime. Yes, sir. Payday. I'm the gospel of the ticker and the pulpit is mine. Velvet don't trade. Velvet dictates trends. Cash rivers overflow, drowning all your fake friends. Turn your stop loss into my down payment, while my profit chart climb like a stairway to heaven. Whispers on the floor say I am the report. Stack so loud, NASDAQ feel noise, complaints in court. Every rad day is just a setup for my entry. I baptize the bear bull horns for the ministry. Every short you place is a boost to my throne. Your loss is my wine, pour it out, watch it foam. Come on, Velvet don't gamble, Velvet rewrites fate. Yes, sir. Hey, ow. Even market guys whisper when I step to the plate. I'm a ticket's temptation, liquidity sin. Turn futures to confessions. Wall Street's born again. Degenerate Messiah with the gospel of green. By the dip, flip the script, Velvet reigns supreme. Options like confetti spreads, raining on the floor. Every candle I ignite, got the brokers begging more. Portfolio baptized, prophets holy and divine. You pray for a rally, Velvet wrote the design. Ooh, ladies, listen, bitch. See, they try to play, yeah, but I am the game. Ha. Velvet don't chase, Velvet sets the pace. Velvet don't chase, Velvet sets the pace. Ready for change, Velvet sets the pace. Ready for change, face the pace. Payday Friday, baby, sing it loud. Come on, every trade I lay down shakes the whole damn crowd. Side with the king where the charts glow lit, 'cause with Velvet in the room, every candle's legit. Payday, come on, payday. Payday Friday. Woo! I make Wall Street sweat when I enter the ring. Every chart bends down when it hears Velvet sing. Come on now, the throne is eternal, my profits don't sway. Now let's make some motherfucking money.
Oh, brother, oh, brother, oh, brother. Good morning, ladies and gentlemen. We're back at it again with another episode of the Matt Kohrs Show, where today is a very, very exciting Friday. It is, in fact, a Payday Friday, PC inflation report Friday. It is a new Buffalo shirt Friday. It is a day that we either find out if we're making a bunch of money or not. It has it all. This show's going to have highs, it's going to have lows, it's going to have laughing, it's going to have crying, it's going to have reflection, it's going to have everything you could possibly need in your morning wake up degenerate trading type of a show. Folks, new Buffalo shirt. Your first question is, how did I possibly acquire a shirt of this caliber? I'll let you guys really take it all in. I'll let you take it all in. And that's a very fair question. How did I end up with this shirt? Well, if there were anything that ever made me believe in a universal pull, almost as if a metaphysical attraction to something you need, that was this shirt. The universe put this shirt on my path. The universe put me in the path of this shirt, and 'twas destined that we align together. And here we are. Here we are, changing the airways for the better. Well, to be fair, if you're just listening to this, it's probably not just the airways, because you're probably like, what's he doing? What's he look like? But for those of you who can see what's going on, you get the show. You get the show. I feel as if I found a new legendary item that has maxed out my Lux caliber, my Lux skill, my anything related to luck. I feel like I put it into overdrive, and I feel as if there's literally no chance of me possibly losing money today. It feels as if it's foretold, written in the skies above, that no matter what I do today, opposite of some of our recent streams, that I'm only going to be making the right decisions today. I know if you guys have seen the previous shows, you're like, but Matt, a lot of the times we've seen you actively in real time making the wrong decisions. But folks, remember, I didn't have this shirt on at that point. At that point in my life, I was not suited up with the proper attire to battle the market gods. But here am I. I'm ready to let it rip. Folks, we're starting early today because in a mere 3 minutes and a little bit of change, we are getting the PCE inflation report. The market reacts to these reports. Now, I'm not really saying bullish or bearish, but we do see large moves. I'm hoping for a large up move, hence why I have on my green protective glasses. But just in case it's necessary, I also, if things get a little bit dismal, I have on my red protective glasses as well for a realistic safety precaution. This is why we're starting early. This is why we got out of bed. This is why we're excited for the day and also excited for the weekend. So not only are we hoping to get paid ourselves in the world of the market's reaction to this PCE report and the ensuing trading session, but then from there, we're going to have some fun. And we're in fact going to be doing our own little Payday Friday where we're going to do $200 of cold hard cash in a marbles race. We're giving away Vanquish accounts and we're going to have some fun. So feel free. It is free for everyone to enter. All you have to do is like, retweet, and follow this tweet. It's pinned to the top of chat. It's in the description of the video. You could go to my Twitter at Matt_Kohrs. And if your argument is, but Matt, I don't have a Twitter. I don't know. Grow up. I guess the giveaway is not for everyone. It's free for you to make a Twitter account, and if you want to make it, you can have a chance at $200. You could have a chance at Vanquish accounts. And if you don't have a Twitter and don't want to make it, that's on you. I don't know. I can't make you do it. I can't hold your hand through this world. It's just, this is what it is. Don't complain to me about not having it. But in the meantime, you get to see a really cool photo. A lot of you are going to be saying, but Matt, that's Photoshop. That's AI. No, this was actually a real photo session I had with my cat Piper last night. We did many photos, and you're going to be seeing them in the ensuing streams, but not AI generated. This is my actual cat. We trained her to do it. It involved a lot of catnip. It involved a lot of tuna. It involved a lot of chicken. And yep, here we are. So don't look at that. Or feel free to check that out. Whatever. Payday Friday. It's going down. The other thing going down is the fact that we are all waiting. We are waiting. I can't really see the best with these glasses. Like the tint on the screen makes it uniquely difficult. Do I not? And I have all these tabs that really don't make the most sense to me. All I can tell you is I know if I go to this website right here, it's going to tell you, am I going blind in my right eye? Like, why is this eye so much darker? What am I doing with my life? It's just, maybe it's so bright. Like I'm just seeing the reflection of my own face. It's kind of like, that's pretty freaky. I don't know if it's supposed to be doing, I think I might be going blind in one eye. Who knows? Anyway, PCE inflation report coming out. Remember, this is important because the Fed has on multiple occasions admitted that they weigh this inflation report the most. So yeah, we get the CPI, we get the PPI, we get the Michigan numbers, and we get a cohort of other pieces of data that are allegedly a measure of inflation. And they have said this is the most important one. It has the largest breadth, and it is the most reactive to recent data. That's a little TLDR of allegedly why they care. So we're going to find out if it comes in at expectations or cool. I'm expecting the market to pop. If it comes in hotter than expected, I'm very much expecting the market to drop. So whenever this type of stuff happens, you can bet that you're getting your boy Rick Santilli, and he's already chit-chatting.
After flattening the yield curve. And why is that
Come on,
so important?
Rick.
Because
What's
it goes right
everyone's
to the
vote?
heart of what's markets paying attention to.
What is
Any
everyone's
strength
vote?
at all in the
Bullish,
economy,
bearish? Where are
particularly
you
in the
guys
labor
at?
market, will result
Where are
in
you
more
at?
upside in yield, downside in price to the short end because of its association
pop.
with the Fed
Little
and
pop.
how the Fed has underscored
Give
labor.
it to
And
us,
here we
Rick.
go. The income, spending, and PCE numbers should be hitting the wires here. These are August numbers, some of the Fed's favorite inflation gauges. And of
up and
course, I'll
away.
have to tap dance
Down.
a bit as I don't see
Which way are we
some
going?
of these numbers. But just as a preview, we're expecting up 0.3 on headline, and here it comes. Comes in a smidge hotter,
expectation.
up 0.4 instead of up 0.3. Exactly the same, at least up to this point, until I see
Positive
revisions.
reaction
equals
thus far.
last month.
Good thing
so
I have these
0.4
glasses
back
on.
to back. How does that comp?
Good thing
you have to
I
go
have
all the way
these
to April of
glasses
this
on.
year, mid-year basically, and find a higher number, up 0.8. Also, on the personal spending side, the
got
income is
coffee
a
on
little
my feet.
warmer.
What do I do?
Not bad. Spending, well, it's a little warmer too, by 1/10. Up 0.6%, a little better than 0.5%, which is what we were expecting and what was in the rear view
660.
mirror. And up 0.6 will be the best spending level since March when it was up
6,625 on
0.7. Now, if we
SPX.
account for inflation, make an adjustment. Let's
We are
call this
currently
real
right
spending.
here on
It's up
SPX.
0.3%, still
Now we
better
have a
than
downside
expected.
gap,
Equals
though.
the
Yesterday
rear
we
view
had an
mirror.
upside gap,
To
though.
find a better real spending number, you go into March once again when it was up 0.7. Now let's get to the meat on the bone, the PCE numbers.
Give
On
it
the
to us,
month
brother.
over month, up 0.3 as expected. That is 1/10 hotter than the rear view mirror. 0.3, well, that would be the warmest since February when it was up 0.4, and Jan and Feb were the highest readings of the year, both up 0.4. Now, if we look at the year over year, it's 2.7 as expected. Once again, 1/10 hotter than the 2.6 in the rear view mirror. 2.7 equals where we were in February, which was the high of the year. To find
Getting
a higher
paid,
number, you're going to
up
March of
4K
24 when it was
climbing.
2.8%.
Let's see
Now
if
I
this
think
really
the
gets
most
going
important
today.
numbers, we look at
4.7K,
core
let's
PCE,
go.
month over month, up 0.2. Good news. Not only is that as expected, it's 1/10
There
cooler
we go.
than the rear view mirror, which was up 0.3. And
Here we
finally, the
go.
most important number of all, in my
Hey,
opinion, core
Macarena.
PCE year over year up 2.9%. Same as we were expecting, same as last month. And the high reading of the year was February when it was 2.95%. If I had to look at this and summarize, here's what I would say, is that if you're looking at is inflation and trying to dismiss it, I think you have a hard time doing that. It isn't necessarily getting much warmer. The thermometer, vacillates 1/10 here and there, but the issue is stickiness. So how does that fit in the Fed's profile on their easing campaign? Listen, I can't speak for them, but it is sticky. And one of the denominators of this has been sticky a while. So any who are looking into the political spectrum to try to pin inflation or higher inflation on some of the legislation or potential legislation, I think they'll have a tough time. It just seems to be stuck a bit. Yields really haven't moved all that much. We're now at 4.16 in a 10-year, and 4.16 would be roughly unchanged on the day, up 3 on the week, as we pointed out. The pre-opening equities seem to like it as they've enhanced some of their green
Hell yeah.
just a smidge.
Hell
Becky,
yeah, brother.
back to you.
Becky,
Hey, Rick, people
back to you.
who say the Fed didn't move the goalpost to 3% say that the Fed still thinks that we're headed in the right direction and they can wait this out and that it's not going to get worse. Does this still gives them more time to say, yeah, we were right to cut. We're not moving the goalpost to 3. We still have 2 in our long-term plans.
Folks,
Might
if you
take
haven't
a
already
little longer,
smashed
but
that
we're
like
on
button,
track. Can
it's
they
the
still
only
say
way
that?
that I value my life
I
these
think
days.
they will still say it. I don't
That's
know
what I
that I
mean.
would necessarily. Yeah, they will. I think they'll definitely keep saying it. It's a
That's
nice
the only way
rock
they
to
can.
hide behind.
That's the only way they can justify cutting a quarter. If they didn't move it the goalpost, if they still say we're dead set on 2, then they got to have an explanation for being so sticky, because we haven't moved any closer to 2 in a while from where we were.
No, but if you listen to a lot of Fed officials, one of the first comments they make is, inflation's under control. It's coming into our objectives. I really don't see that happening. Like I said, I think it's, it's stuck in the snow right here. And another point, I don't know that they're really going to ever get it right back down to 2%. And if they do, the runway is a super long runway. And Joe, let's be frank here. Right before COVID hit, the Fed, I believe, was in 2018, had all these meetings about how they were going to, look at all the metrics that they have. And it was decided 2%, they're going to stick with it. And the issue is when you decide to stick with it and you make a big deal about it, and for all those years, Joe, where you and I were saying, wow, you can't raise rates off zero. Yeah, inflation might be 1.6 or 1.7, a little under target.
Hang on, I'm getting alerts,
you know, you got to
folks.
blur your eyes a bit. Well, they don't want to, to have
alerts.
the same kind of equilibrium,
We're taking out that high from
on the
6
equation
a.m.
when it's on the
yesterday.
warm side. I really do think that 3% is kind of going to be the new 2%. But it's going to be tough for them to
They're
move the
talking about
goalposts
milk,
until
if
markets
anyone
maybe
is
get calmer,
confused.
until we kind of get past some of the issues affecting the markets.
All right, Rick, thank you. Right now, let's bring in our economic panel. Groundwork Collaborative Senior Strategic Advisor
bring
Kitty
on
Richards.
real people
She worked
this
in the
time?
Treasury Department under President Biden. Lydia Mashburn Newman is American Institute for Economic Research, Monetary Economics
Inline
Director,
PCE,
and
markets up
Manulife
as
John
predicted.
Hancock Investments
50%
Co-Chief
of the
Investment
time, I'm right.
Strategist Emily
100%
Rowland.
of the time.
Let's go through this one at a time. And I guess, Lydia, let's start with you. You agree with Rick that at this point, inflation is stubborn, maybe not as hot as it could be, but certainly stubborn.
It's definitely stubborn. I'm reminded of Chris Waller's remarks at the December of last year, where he said inflation is like being in a UFC fight and they can't keep it down in the octagon. And that seems to be the case today. We're seeing inflation persisting at this hovering around 3%. Is that the new target? I think arguably yes. Even the Fed officials at their latest meeting with their projections think that we'll hit 3% for 2025 amount, and that it won't hit their 2% target until 2028. And that is 7 years of the Fed not reaching its 2% target. So one must argue their new target might be 3%.
Not mad at
rates
this guess.
maybe are where they should be.
No.
Kitty, does
Not
this
bad.
pose a problem for the Fed, this inflation data?
I think the really difficult thing that the Fed is facing right now is, remember, the Fed doesn't just have an inflation
buddy,
target. They
it's
also have to think
climbing,
about the health of the
8K.
labor market, and that's a really important part of their
hello.
mandate. And what we're seeing in the labor market over the last few months is some pretty serious warning signals. We actually saw, after revisions, job losses in June, very slow pace of job growth in August. And I know that Fed officials are really signaling that they are concerned about that slowdown in the labor market. But to some extent, as long as they're targeting 2% and facing all of these headwinds, they are really in a bind about what to do about inflation.
Here's a comment from Michelle Bowman this week that someone pointed out online. Here's what she said about this. Economic research is clear that when conditions exist like those we're currently facing, monetary policy should de-emphasize inflation. And by the way, what we're facing right now, as she said, is supply shocks impacting demand. Do any of you agree with that statement? Does it change how you think about things if the Fed is kind of de-emphasizing inflation? Kitty?
I think one of the big points here is to think about that if the Fed targets inflation and gets it right, the labor components actually follow along. And if we look at what's happening in the labor market right now, a lot of it is structural shifts and changes for which monetary policy is a poor tool for correcting. So I think it's definitely important for the Fed to be cautious. Yes, they have two mandates, but the inflation one really does help them hit the employment one to the extent the Fed can actually improve the employment situation.
Kitty, I'll let you answer that, too, before we turn to Emily and talk a little bit more about the market's reaction.
Dude.
I think that the Fed has been in a difficult position throughout this recovery.
10K before the market's
ideas about
even
supply
open.
shocks were obviously really important during the pandemic bout of inflation. I think there are arguments that there was too rapid and too high a response to supply chain driven inflation. The Fed got out over its skis, or perhaps was too slow to come up after being at zero, and then too slow to come down. But now they really are in this long slog of, potentially inflation ticking up again, the labor market really cooling, and I think it's a really difficult position for policymakers to be in.
Palantir's catching a bid.
Emily, let's talk a little bit about the market's reaction to this. There hasn't been much of one, and that's what you kind of anticipated. In fact, the Dow is now indicated up by 225 points, but yields haven't really budged that much.
Yeah, investors are hitting this snooze button on this one, Becky. And, let's think about it. PCE has been above the Fed's target for over 4 years now. It's almost like you're in a class, you're failing every single test, but the teacher is still letting you pass the class. And that's what's going on right now. There's an old adage that bull markets don't die of old age, they're killed by the Fed. And this time feels a lot different because the Fed is willing to cut amidst still elevated inflation. They're clearly not willing to sacrifice the economy here in order to bring inflation down. And this market is reacting so positively to it. This is an investor's dream right now. The Fed cutting amidst an economy that is still decent and inflation that is still elevated is really one of the things that's been causing the optimism to pervade across risk assets.
You think it's the investor's dream market, but only for short-term investors, that there's a real dichotomy between what short-term investors see right now and long-term investors. You want to explain that?
Yeah, there's a huge divergence. Right now, short-term investors, the trend is your friend. Momentum's working, trend-following strategies.
Look at that.
You've got AI rolling. It feels like there's a new announcement on CNBC every morning about a new investment in AI. And meanwhile, long-term investors are pointing to elevated valuations, 22.5 times forward earnings, bumping up on that record of 24. We've got high-yield bond spreads near the tightest levels in history at 266 basis points over treasuries. We've got discussion that we may be seeing a misallocation of capital amidst a speculative frenzy building across areas like crypto. So there's this huge dichotomy between these views. We think it's important here to stay invested. Bull markets don't die of old age, once again, but we want to think about trimming into risk, trimming those more speculative parts of the market, leaning into quality and
Pop quiz. Can any, you know, when we used to play that game growing up or at a bar or something, kind of a bar game where you have to like notice the slight differences between two similar pictures. Can anyone in the audience tell me the difference between these two pictures? Picture one, picture two. Picture one, picture two. Picture one, picture two. Can anyone notice any differences? I honestly, for the life of me this morning, I can't find the single difference between these. Like, they look the exact same. Like, maybe if I squint, picture one, picture two. Picture one, picture. Dude, I can't see a difference. That's what I think this is one of those trick ones where it's the exact same photo and they just get you to stare at it. Oh, it's the color? Maybe. I don't know. That might just be a screen thing, though. I think they're screwing with us. I don't see a difference. Folks, I don't know, man. It might be the same photo. It might be the exact same picture. I don't know. Maybe is it?
We were talking about the difference between
is it?
long-term treasury yields, and one of the things
I don't, guys. What the fuck is this one? Oh, we have too much time on our hands.
Because people are starting to anticipate more inflation in the long run, but faster economic growth in the short run. And that's a real problem. And they're anticipating those rate cuts, which, drive yields down in the short term. But ultimately, if people start to believe that the Fed is just an arm of the Trump administration and that they are no longer making decisions based on sound policy guidance, you're going to start to see a lot of problems in the markets.
I knew I could get you going. Emily, is that on your radar screen? Do you think? I mean, that maybe so. Or Lydia, you can both weigh in. Do you factor that into your long-term investment decisions for all your clients, that the Fed is not independent anymore? Emily? We don't. We think that discussion is a little bit overdone right now. And Joe, the key reason for that is right now there is a lot of confusion. The other speakers just highlighted the fact that we've got kind of murky data for the Fed to contend with. Guess what? By next May, we're going to know a lot more. We're going to know whether the labor market can reaccelerate on fiscal stimulus and on rate cuts. We're going to know whether the labor market deteriorates further. We're going to have a lot more answers. So I don't think these Fed discussions. Well, yeah, exactly, right? Well, that might kind of pose a challenge.
So now we're going to have a downside gap fill today.
Because we have to really appreciate this inflation number because it might be a while.
Look, Joe, one other thing here
Downside
is
gap
this
though
data
to
just adds to the pile of data suggesting that the
659.41, the high
United
from
States
yesterday.
economy is the strongest economy across the globe. It's not being reflected in markets. Chinese stocks
Downside
are up
gap fill on the
40%
Qs to
year to date. They are up
595.12.
20% this quarter on
Downside gap fill
0%
on
earnings growth
IWM
and on
to
economic data that's
239.99.
deteriorating. European equities up
All the highs from
25% year to
yesterday.
date. Their earnings are in the low single digits.
SPX
They don't have
will
AI. They
be
don't have innovation. So we want to think about
66619.
rotating back into the United States based on this better
Bitcoin
relative data
not
and
looking
better
good.
relative earnings prospects.
Lydia, how about you? Are you worried?
The independence question is always a big one. And I like to remind people that Fed independence shouldn't be an excuse for a lack of accountability. But we do want to keep our monetary authority free from direct political pressure that has historically always led to very bad outcomes, including things as bad as hyperinflation. I don't think we're anywhere near that level of concern. But I do think there are a number of other things happening in the marketplace right now that are not necessarily Fed related or Fed independence related that are concerns, and they have more to do with fiscal policy. A lot of the uncertainty surrounding the economy and the economic outlook have to do with issues on the labor front that have more to do with administration pushes, such as issues with immigration. And then we also have other issues related to government spending. If we're looking at bond yields, we can't forget that there's another side of this coin. It's not just Fed policy, it is government spending. And we're about to hit another government shutdown. So I do think that we need to be really mindful that there's a fiscal question here that also is playing into market calculations, especially longer term investors' calculations, and we should be wary.
All right, Kitty, I was just going to say, Emily said we're killing it vis-a-vis the rest of the world. Best place for the economy. I was just going to end it with, is that because of Trump or in spite of Trump? We got to do that next time. I think,
SoFi
right?
is looking good this morning.
We'll let that.
Get around to next time.
I think I might know where you stand.
I thought it was interesting that what she was talking about
Texas
was that
Roadhouse catching a little bit of a bid
across the world are completely inflated compared to their performance.
That's because the United States leads the rest of the world.
Right.
Oh, see?
Yep.
Okay. It's good. It's good. Congress needs to argue like this.
Look at that.
With a smile.
No, we heard what Nick Clegg had to say about how the House.
I really wanted to take out 662.
Really
Look at that shelf.
Hanging microphones that you can plant yourself under.
Resistance. 662 is going to be pivotal today if we're fortunate enough to get up to that zone.
By the way, we told you earlier about shares of Boeing trading higher. That stock's now up by 3.6%. It comes after a Wall Street Journal report said that the FAA will...
No one cares about Boeing. So if you are just joining right now, the major thing you need to know is we just got an inflation report. Core inflation rate held at 2.9% in August, as expected, Fed's gauge shows. So as I said, if inflation comes in at expectation or lower than expected, prepare for a pop. That's exactly what happened. Had it come in higher, aka hotter than expected, that's most likely when we would have seen a bit of a drop. And why that all happens, the very quick and dirty TLDR, is because of its implications on the Fed and monetary policy and the likelihood of an upcoming rate cut of where are we going to be at the end of the year? Are we going to get another 25 bips, another 50 bips, another 75 bips? So coming in at expectation keeps us somewhat on that pathway of 2 more 25 bip rate cuts between now and the end of the year. So the market loves when you remove uncertainty, and when we come in at expectations, it's in the word, like that was the expectation. But once again, there's a non-0% chance that maybe Wall Street is wrong. So that's why you're seeing the market react positively to the news, because even though it like truly expected that, once again, you're removing a little bit of uncertainty, a little bit of like just unknown variables. And when you do that, we're getting this pop. It just so happens though that this pop is now nicely aligning with a technical breakout. Now, I'll be the first to tell you that technicals are not the end-all be-all. Data drops are not the end-all be-all. If anything, I have the opinion that you should be putting all of this stuff together. Look at the technical setup to get an idea of risk-reward. Look at the narrative to get a general idea of potential headwinds and tailwinds, along with seasonality. Gives you an idea of just the stats of the day. Look at options flow. See where you have big positive and positive and negative gamma pockets to get an idea of, are market makers going to be mean reverting or are they going to be trend following? It's really, that's in my mind at least, the puzzle of this overall market in active trading, whether it's day trading, scalp trading, swing trading. That's the puzzle you have to be putting together. I deeply believe one of those pillars is not more or less important than the others. It's really, what is this narrative? What are the puzzle pieces you can put together, knowing all those individual things? And right now, I'm seeing a nice technical breakout along with a lot of positive gamma, big support at 6625. I want that to hold out of the gate. Right here's positive gamma. We have a bit of negative gamma up to 6660 and then potential resistance at 6670. So yes, those are going to be some important upsides that I'm watching on SPX. However, if this fails out of the gate, because remember, even though I'm bullish right now, I'm going to be the first to admit that there is a downside gap fill to 6619, which is pretty much where we're at. So maybe the market wants to get that gap fill. Maybe it does. Maybe it doesn't. We're trading at 6629 right now, so that'd be another 10 points down, which is roughly equivalent to the SPY dropping by $1. It's possible that we get the downside gap fill and then we pop from there. Maybe we just rock it from here. Maybe we open up, get the downside gap fill, and then completely puke. I'm just saying these are the key levels to watch. So yes, we have kind of this spread structure right here. You can see it's long calls and then sold puts. This is actually a bullish position, just so everyone knows. When you are selling puts, that's an overbet. When you are buying calls, that's a overbet and a continuation bet as well. So long calls at 6630, and we have a chunk of sold puts at 6625. When you're selling puts and buying calls, you are basically removing negative delta and adding positive delta, which has a 2x impact on pushing that delta higher and higher. So I'm going to be looking for this range to hold out of the gate, especially because not too far away is the downside gap fill. And then also we just have the all important 6,600 big technical level, big psychological level. It's just a key level. But from here, you can see the next level of interest is kind of all the way up at 6670. And then from there, you're actually getting a pocket of negative gamma. And remember, in those negative gamma pockets, that's where things can get really volatile. And you can see larger ranges and you can see nice trend continuation. This happens to be above us, so it would favor the bulls. But remember, the opposite is also true. If the negative gamma pocket's below us and we get into it, that could actually really favor the bear. So I know this is like a little bit of a reach situation. I don't know if we're going to get there today. I would love if we do. And obviously, so with this player, someone is long 2,000 contracts, 0 DTE at 6690. Someone is long 1,100 contracts at 6,700. Once again, I'm on the 0 DTE toggle. So these, like I said, are reach targets. On the flip side, I want to be fair. Someone is aggressively playing to the downside on puts at 6,575. They're long 1.4 thousand puts. Once again, 6,575 for today. Another player out there is long 2,000 contracts at 6,540. So as much as we have people aggressively betting on the upside, you're also getting people aggressively betting on the downside. So I don't want to seem as if it's like completely in balance one way or the other, because it isn't. It very, very much isn't. And if I scroll out, you can see overall, there's little pockets of negative gamma. I would say the evident one is 6690, and you have a couple in here. But overall, that's a lot of positive gamma. And really, I don't know, shit doesn't hit the fan unless we get like a huge pop to the upside. There's a lot of negative gamma up there. It's a huge position, a massive position. What is this? Why can't my cursor? It is 14.6 thousand long calls at 6,800. There's no way that this was traded recently. This has to be something that was scooped up a while ago and it just happens to expire today, because the chance of us getting to 6,800 is a snowball's chance in hell today. Is it possible? Yeah, maybe the snowball does survive purgatory, but the odds of it are very, very low, especially with such a huge node of positive gamma right here at 6,715. Obviously, we've seen crazier shit. Of course, it could happen. But remember, when we're saying it could happen, maybe we should kind of look at the odds of it. And the odds of this happening, I mean, you could look at the delta value. It's probably sub 1%. So is it possible? Yeah, but it's like that meme from Dumber and Dumber where you're like, so you're saying I have a chance. That's pretty much where we're at. So overall, I'm looking at the option setup. Options easily could break bullish. easily could break bearish. I'm looking at the technicals, and right now the technicals are, at least on the 30-minute, looking like a nice potential reversal if it can hold. Nice downsloping trend line, and obviously, so we're trending up, up, up. We have a short-term pullback. It put in a higher low, or at least an equal low, and we saw that yesterday, and now we're on top of that trend line. Maybe it holds, maybe it doesn't. That's the point of the show. If we all knew the answer to it, we'd be multi-billionaires. Personally, I'm looking for this to hold. I'm hoping this bearish trend turns into a bullish trend, and I would love a nice return. I mean, first we're watching the breakout at 662, then you're looking for the breakout at 664, and then really we're talking about the all-time high at 667. So obviously that's a breakdown for the SPY. Similar situation in the Qs. You could see down-sloping trend line. We're getting the breakout. Similar situation in the Russell, but a little bit weaker in the Russell. Technically trying to break out, but if you drew this trend line, it actually didn't successfully get the breakout. So on a relative basis, a bit of weakness in the Russell, and also a bit of weakness in crypto as well. So if you're bullish, play the relatively strong ones. If you're bearish, play the relatively short ones. I don't think that's like some crazy conjecture. So this is all happening. Once again, if you're just joining right now, this is all happening because of the inflation report we just got at 8:30 a.m. Folks, if you haven't already, I would ask of you very, very kindly to smash that like button, say hi to your friends in chat, whatever you want to do for engagement, liking, subscribing, turning on your notifications, hitting those comments. All that type of engagement tells the algorithm overlords on Rumble and on YouTube that this show is a good show, and it'll end up presenting it to more people. So I would very much appreciate it. Obviously, it is free to you. And in fact, I'll take it to the next level. And we're doing a Payday Friday giveaway today. We're giving away 5 Vanquish accounts. We are giving away $200 of cold hard cash, and anyone can get into this if you want. All you have to do, it's pinned to the top of chat. It's in the description of my video. All you have to do is like, retweet, and follow this Twitter account, my Twitter account, at Matt_Kohrs. If you don't have a Twitter, I don't know, go make a Twitter. If you don't have a Twitter and don't want a Twitter, don't make a Twitter. But you're then not going to be involved in the Payday Friday. That is up to you. But anyway, like, retweet, and follow, 100% free. Like I said, this is just something we are running, obviously. Shout out to Vanquish Trader for giving us 5 free accounts to give away to you guys, and also we're gonna have some other specialty stuff planned for all of you. So get psyched, get psyched, get psyched. All right, let's start our actual market breakdown here, because I know we started a little early. Stock futures rise after inline PCE inflation report. We're going to see how this goes, because remember, the market likes when unknowns are removed, as in the unknown of maybe we have hot inflation. We removed it, market goes up. But on the same note, I would not be doing my job if I didn't tell you the odds of a downside gap fill are pretty high. The downside gap fill on SPX is 6619. On SPY, it is 659.41. On QQQ, it is 595.12. So maybe just right out of the gate, we get the downside gap fills and we bounce from there. Totally possible. Yo, shout out to Mike Kimmel. Sent 5 Matt Kohrs Show gift memberships. Shout out Dumb Money, Reyes, Cody, Megan, hell yeah, and Jets to the moon. Well, I don't know if the Jets are ever going to win a game again in their life, but that is a side point. So right now, the market is currently liking what it's seeing, and I want to dive into that. But just to keep you guys updated on some of the other political narratives we've gotten into recently, former FBI Director Comey charged amid Trump retribution push. So we heard murmurs of this. I believe it was first reported by MSNBC that he was going to be indicted, and he was in fact indicted. James Comey indicted on false statement charges. Charges follow Trump's ouster of the DOJ prosecutor who found insufficient evidence for case. Ex-FBI Director asserts innocence. Basically, he's getting smacked with the allegation that he lied to Congress. Former FBI Director James Comey indicted after Trump called for charges. Former FBI Director James Comey, a longtime target of President Donald Trump's ire, was indicted in federal court in Virginia on charges of making a false statement in obstruction. The charges came days after Trump publicly complained to the Attorney General, Ms. Bondi, that nothing is being done about Comey and other of the president's perceived enemies. Donald Trump has made it clear that he intends to turn our justice system into a weapon for punishing and silencing his critics. And this is according to the Senator Mark Warner. What I don't get about that is if what he's being accused of is accurate, well, that means he broke the law. So I don't understand this thing of it's like a weapon. Like, if you broke the law, you broke the law. If you didn't break the law, you didn't break the law. Like, in my mind, it's kind of a binary situation, and I don't like how either side is jumping to conclusions. So in my humble opinion, you have right-leaning people who support Trump who assume, yes, James Comey is guilty. Okay. And then you have other people who don't like Trump who are like, no. This is a weaponization. This isn't right. This is fascist. He's innocent. What do you mean? We don't know. That's the point of having a legal system, at least to my understanding of how the legal system is set up in the U.S. You are innocent till proven guilty. He has his opportunity right there to plead his case. Obviously, the prosecutor has their opportunity to plead their case. In the United States, you are innocent till proven guilty, but I really don't like how people are rushing to the conclusion when, let's be honest, most of us, not lawyers, don't know what you're talking about. And so we just have to wait. And like, I don't know, my opinion on this is, okay, we'll wait and see. If there is credible evidence that something's a little suspect, we should look into it. When you look into it, maybe you find something. Maybe he is guilty. Maybe you look into it and you don't find anything and there's nothing there and he's innocent. But people are making these grand extrapolations and assumptions where I'm like, okay, whatever. If there's enough evidence for it to go to trial, let's let the trial run. And beyond that, I don't know why we have to make assumptions of who is right or wrong. Also in the political sphere, Trump plans new tariff push with 100% rate on patented drugs. So we've gone many, many days without new tariffs, and we had to hit that restart clock last night. Right here, U.S. to impose 100% tariff on branded patented drugs unless firms build plants locally. This is continuing with the overall effort, and I really don't mind it. I know in the short term, it's causing some people to, I don't know, get their feathers ruffled, but Trump overall clearly is attempting to bring a lot of jobs and revenue back internally to the United States, and this just is one of them. If you guys didn't know, one of the biggest exported products from Europe to the U.S. is pharmaceuticals, and right now this is obviously saying, I mean, at 100% tariff, it just doesn't even make it worth it. So it's like, okay, if you bring it back, and we saw the exact same actions with chips, we saw it with vehicles, like it's the exact same playbook in just a new industry. The U.S. will impose a 100% tariff on all branded or patented pharmaceutical products entering the country from October 1st. The measure will not apply to companies building drug manufacturing plants in the U.S. So that's the trade-off, is we won't do it if you agree that you're going to build out new manufacturing plants here in the U.S., i.e. bringing jobs back to the U.S. He said that the exemption covers projects where construction has started, including sites that have broken ground or are under construction. I mean, it's pretty evident. It's like, hey, if you say you're going to build out here, cool, we'll let you do it. Anyway, this is what Bloomberg had to say.
And pharma isn't the only sector in Trump's crosshairs, right? Earlier, he also announced industry-specific tariffs targeting heavy trucks, as well as when it comes to furniture. Let's bring in Cameron Johnson, a senior partner at Tidal Wave Solutions, and joins us now from D.C. Obviously, we've seen tariffs come back on the headlines here. How are you interpreting some of these latest lines that we're seeing from the Trump administration?
So this is just the continuation of a very long process that will continue to go on probably for the rest of the administration. And I think some of what we need to look at is, as Amber just stated, there are some signals previously of what they want to try to reshore or what they will tariff. But at the same time, they are going to try to go after instances of what they see as flooding the market, which is what the Truth Social tweet was about, particularly in regards to furniture and cabinets. So this is just kind of the continuation of the process of tariffs that we'll see for probably the rest of the administration.
All right. So, I mean, does this derail the progress we've seen, broadly speaking, on, we just learned about the TikTok conversation and the progress there, and we're now looking ahead to potentially, of course, that meeting between the two. Does one affect the other, Cameron, in your view?
Not for China. It will definitely affect some negotiations, particularly, for example, with additional negotiations with Japan and South Korea. For example, Samsung Biologics, that does monoclonal antibodies, they don't have a facility in the U.S., but they do have R&D in San Francisco. And so it's really unclear what exactly is a manufacturing facility. None of this is actually clear.
The airport
to your
bathroom,
point, this is one of the
honestly,
biggest issues we have is we don't know what it actually means, what these statements mean.
How funny would that be?
Is a manufacturing plant mean you have to manufacture for everything in the U.S.? Does it mean you can just have a lab set up and you can produce? It's really unclear. At the end of the day, though, 90% of all prescriptions written in the U.S. are generally for generic drugs. And this particular order doesn't seem to hit APIs, the active ingredients in drugs. So for the short term, it may not have as big a hit as we think, but as these becomes more clear, it could have a much bigger impact down the road.
Can you tell us, I know it's still a lot of unanswered questions, but in terms of who is most exposed or what countries are most exposed, are we able to kind of, find some winners and losers in all this right now?
So it's a bit of a mixed bag. For example, anybody who does not have a manufacturing plant in the U.S. is exposed. But for example, Novartis is investing $23 billion to build or expand 10 U.S. plants. But again, part of the challenge with understanding what the current tariff situation is that only for specific products, or does that mean if you're producing any product in your portfolio, you are now exempt from tariffs as long as something is produced in the United States? All of this is unclear. Another one that I'm watching is kind of the Takeda Pharmaceuticals, which is in Japan, because they export a lot of drugs that are used in different oncology practices and rare diseases. They do have some manufacturing in the U.S., but again, it's a smaller footprint. But it is unclear exactly how this is going to be hit.
All right, he said the word a gazillion times, but I think it is for importance. It's kind of unclear of just like, are you the whole gambit going to get tariffed, or is it per plan? And what it is overall is like, we're missing a lot of detail, but that's kind of how Trump is running this thing. It's more of just this emphasis of you have to, as a company, clearly be putting in a large effort to build out in the U.S. And if you are, he's not going to financially punish you. That seems to be the trade-off. I should let you know that it didn't end there, though. We're not just talking about pharmaceuticals. There was other tariff news. Trump to impose new tariffs on pharma and also big trucks. Levies on drugs will hit companies that aren't building plants in the U.S. We know that, but the other thing was, quote unquote, big trucks. Trump slaps a 25% tariff on heavy truck imports starting once again, same date, October 1st. U.S. President Donald Trump said last night that he would impose a 25% tariff on imported heavy trucks starting October 1st. Trump also took aim at imported goods with fresh tariffs, including 100% on pharmaceutical drugs, 50% tariffs on kitchen cabinets coming after the, I guess, big cabinet industry, and 30% on upholstered furniture. So just certain things. Clearly, the TLDR, the general vibe of all of this is you're not going to be financially punished if you're building out in the U.S. And we saw this in many industries, and I guess this is the most recent industry that he is paying attention to. Trump approves TikTok deal through executive order. Vance says business valued at $14 billion. So obviously, there's a lot of moving parts. There's a lot of news when it comes to the administration. That's how they like to run things. And this was just another piece of news that came out yesterday. It was approved through an executive order. President Donald Trump yesterday signed an executive order approving a proposed deal that would keep TikTok alive in the U.S. Under the deal's terms, which China must still approve, and they've been a little quiet on it, a new joint venture company will oversee TikTok's U.S. business while ByteDance holds less than 20% of the stock. Vice President J.D. Vance said the transaction values the business at $14 billion, but no purchase price was provided. Once again, $14 billion. It is actually kind of underestimating what a lot of people thought it was worth. Anyway, the weird thing on this particular narrative, China stays conspicuously quiet after Trump's TikTok deal declaration. So we said it's done. They haven't said it's done. So that's a little weird. So you might want to pay attention to it. Seems like it's another pawn in the overall trade agreement with China. So there might be news there. And remember, it could have an impact on certain publicly traded companies in the U.S. here, such as Oracle. Trump takes aim at chip makers with new plan to throttle imports. Are you seeing a theme here of what's been going on ever since yesterday? Administration wants domestic manufacturing to match imports and will impose tariffs on those companies who don't step up production. So we're talking about kitchen cabinets. We're talking about chips. We're talking about drugs. We're talking about even social media of bring it back here to the U.S. That's the general theme, and the companies who do it will not get financially punished. The ones who do it will not only bring jobs back to the U.S., but they're going to be able to avoid whatever in the world is going on in Trump's mind. So that's the general theme of the most recent narratives politically. So we have the trade war stuff going on. We have a looming potential government shutdown where it seems like the Republicans and the Democrats, surprise, surprise, are not even really chatting with each other. And then the other political hot topic right now is the whole Comey thing, who he was indicted. And like I said, remember, in the US, you are innocent till proven guilty. I personally believe if there is enough reason, enough evidence to look into it, great, go look into it. But let's not make these giant extrapolations of who is right, who is wrong, who is guilty, who is innocent until the legal system plays itself out. With respect to individual equities, we're not in earnings season. Costco did report after the market closed yesterday. Costco tops earnings revenue estimates as Warehouse Club gains more members. So Costco looking somewhat decent. How is it doing this morning? COST currently down 1.7%. Stock really hasn't moved much. It was on a nice rip and then pretty much kind of stalled this calendar year, probably going to be largely impacted by imports and tariffs. So had a nice ripper and then recently has just lower highs, higher lows overall, not moving the most. But I do want to remind you that we're really not in earnings season. The other one that's not having earnings, but not doing as well as even I would like it to do, Tesla. Huge pop, grinding up. I was looking for the follow through, showed quite a bit of weakness yesterday. Maybe it rebounds today. Remember, there's big resistance at 435, currently trading at 428. You might be wondering what's going on in the short term. Why did it get hit yesterday? Why in pre-market was it so weak? And the answer is actually right here. Tesla's continuing sales slump in Europe weighs on the stock price. It cannot crack the nut of Europe. It's just not that popular there. Tesla stock fell more than 4% on Thursday after data out of Europe showed a continuing sales slump for the automaker in the region. Excuse me. Overall demand remained strong in Europe, with fully EVs now comprising nearly 16% of the market for new cars. Tesla's EV in Europe fell by more than 20% year over year. So EVs are getting more popular, yet Tesla is getting less popular. That is the report that came out this morning that caused it to take a bit of a hit. But then obviously you're seeing the overall just market's reaction to the PCE report starting at 8:30 where we got that pump. But yeah, overreaction pops, and now we'll see. Can it take out this resistance at 435? It is gamma resistance, it is technical resistance, or are we going to be able to hold this low from yesterday? We did undershoot it in pre-market, but who knows? Maybe that's all it was, a little bit of an undershoot type of a situation. Folks, if you haven't already, sign up for the newsletter. It is 100% free. You've never had to pay for it. You're never going to have to pay for it. It comes to your email inbox every single Sunday. My mod will drop it in chat, but here's what you need to know. I just break down what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events, which brings me to today, Friday, September the 26th. You should be aware that we've already gotten the PCE report at 10 a.m. We're also getting consumer sentiment. So for the day traders, for the scalp traders, that definitely could have an impact. So just be prepared for a little bit of market volatility right at 10 a.m. And then arguably most useful is the seasonality of each individual trading day. And in fact, today is the only day of the week from a seasonal perspective, the past 27 years worth of data. This is the only day of the week that actually favors the bulls. So over the past better part of 3 decades worth of data, the bulls have won this day 58% of the time, so an 8% edge, a profit factor of 1.5. Anything above 1 is profitable, and the bias is not really bullish, but it's at least leaning bullish. Here's a look at the hypothetical equity curve you would have if you bought it open, sold at close on the S&P 500 futures market for the first 15 years. You would have gone nowhere. Recently, over the past 12 years, there was a big pop-up, 1 year of getting absolutely clobbered, and then the very next year it bounced back. So that's why it's not full on bullish because of this one horrible year. But other than that, it is more generically leaning bullish than anything else. So if you want to use seasonality, great. If you think seasonality is hogwash, then don't use it. I don't really care. I just want to give you the stats, facts, and figures of the situation because I believe that is the best way to approach the market. We are at this point about 15 minutes out from market open. As always, I will be showing you the market flow throughout the day. Same thing on the S&P 500. We can look at all the individual ones as well. Looking at this over here, let me switch back. We could always check in on this. As always, we are marking out the key levels that are of importance. Right now, we're trading around 6625. I do want to remind you that 6619 is the downside gap fill. That's going to be pretty important today. Once again, we are just talking about yesterday's high, 6619. So if you, on a 0 DTE perspective, as of right now. The white box is the transition zone. This is where market makers from a gamma and delta position are going to be, it's going to be a little bit more choppy. It's thought to be bullish above. It's thought to be bearish below. So bullish zone, bearish zone, neutral zone. As from a technical perspective, I always mark out the highs, the lows, and the previous close. And then I also do it with the dash thread and the dash screen. That's the trading session from 2 ago, that low and that high. So we have some highs on the chart. We have some lows on the chart. We have the previous closing value. We have the transition zone. And then the final thing is obviously going to be this all these yellow horizontal lines, which are the key gamma levels. That's where big players, or maybe one big player, maybe a group of big players, maybe it's a lot of retail together. I don't know who it is or how many people there are, but all I can tell you is it's where there's a lot of open interest, as in these are levels you have to watch. Now, I don't want anyone watching this to interpret that of like, oh, if we get there, it's bullish or bearish. No, the bullish zone is here and the bearish zone is here. But the point of these zones is to, or these price levels, is to pay attention to a reaction. Because when so many people go from in the money to out of the money, or out of the money to in the money, is it positive gamma, is it negative gamma? Those are the places where it's more likely than not that you should be paying attention to a reaction. Far more likely that the market has a clear reaction at 6650 than 6640, because of how many players are actively invested in a strike that involves that level. So is it the end all be all? Of course not. There's nothing in the market that's that. But I could also tell you from just looking at all this structure that, yeah, there's a big pocket of positive gamma. The pocket of positive gamma ends at 6650. Then we have a little pocket of negative gamma. And then surprise, surprise, 6670. There's another big level right there. Right here, you have this spread going on. You have long calls and you have short puts between 6625 and 6630, which is exactly why we have those marked out at 6625, because that's exactly where the structure of the long call short puts are. So that's what these yellow lines are. It's just levels where there's large open interest. And when you have large open interest, those are the interesting levels to pay attention to for the breakout, the breakdown, the fake out breakout, the fake out breakdown. Are we going to stall out there? They're just key levels that you're going to want to pay attention to. So feel free to screenshot this. Feel free to write them down. Feel free to use it. Feel free to don't use it. I don't really care. I'm not your mom. I'm not in control of your money. I'm just a guy with a really cool Buffalo shirt. So clearly, we're going to be watching that throughout the day. I also want to do my job and mark out the pre-market highs and lows here for the futures market for all of my SIMDA-funded traders or just futures traders. Because remember, when you mark out the overnight trading session, the high and the low from basically 6 p.m. last night until now, when you know those highs, when you know those lows, there's some really interesting statistics you can gather from it. And the one that really jumps out to me is when you look at the high, when you look at the low of the overnight session, the odds of taking out the high or the low is almost 90%. As in 1 in 2 trading weeks, we don't take out the overnight session high and low. As in most of the time, we either pierce the high, the low, or both. So on the surface level, maybe you think that's impressive, maybe you think it's not, but I'll tell you, if you can get a trade within the zone, and then you're also right on the direction of like, okay, cool, we think we're trending up or down, those are good levels to target. With extremely high odds, we break one of the extremes or sometimes both of the extremes in the normal trading hours, the regular trading hours, RTH. So today, yeah, things look a little bullish, but I'll also be the first one to tell you that out of the gate, the pre-market session doesn't really have an implication on is the day itself bullish or bearish. So when the market opens, we're going to look at the price action, we're going to look at the options flow, and we're going to try to determine what the trend of the day is. And if you want, yeah, you could easily target one of those levels because it is so commonly taken out. So that's why I like to mark those out. And you know what I'll do? Just to make it a little bit more readable, I'll just remove that inside zone. But we have the low here at 5 a.m. closer to 24,569. And then we have the high right past 8:30. And that's closer to 24,747, which means we have a nice 200-point range to be playing with today. So if you get on the right side of the range, you can make quite a bit of money. But that's not something that I would personally, like I said, do what you want. But that's not something personally I would like to rush out of the gate. If anything, you want to let things settle. See, are people profit taking? Are they rolling in? I mean, it's going to be The roost is going to be ruled by zero DTE action. Are people getting into calls? Are they getting into puts? Are they selling calls, selling puts? What are they doing? We want to track the big money. When you can get an idea of which way big money is flowing, your life is going to be far, far easier as a day trader, as an active trader, whatever you want to call yourself, a gambler, degenerate. Right now, the 5-minute, 10-minute, 30-minute is bullish. The 4-hour tried to break to the upside, but no luck thus far. Let me mark that out. Same thing here. We have 5-minute, 10-minute, and 30-minute all bullish. The 4-hour was bullish, got knocked down, and now we're trying to get above this EMA cloud. So taking out this pre-market high is going to be a nice feather in the cap of all the bulls. Now, however, if it tries to go up and we're clearly rejected, well, that actually then shows bearish strength. So really, I would actually argue the break of this 4-hour that we're seeing right here from 6 a.m. to 10 a.m. It technically doesn't end for another 40 minutes. That's, in my book, going to be pretty telling. So calm, cool, collected. Let's just wait for the trades to come us. We don't have to predict beforehand. Let's just react to it and see what in the world is happening. Now, like I said, if you haven't already, enter the Payday Friday giveaway. It is pinned to the top of chat. It's in the description of the video. It is free for all of you to enter. All you have to do is like, retweet, and follow. We're giving away 5 Vanquish accounts. We're giving away $200 of cold hard cash. It's all going down live on today's show. Like I said, pinned to the top of chat, in the description of the video, or just go to my Twitter account at Matt_Kohrs. You're going to notice that it is my top pinned one. It's just all you have to do is like, retweet, and follow, and you will be entered, and we'll do it real time with all of you guys. So we're doing that today. Obviously, a shout out to Vanquish. Use that code GOONIE, GOONIE. Will get you 35% off. And I wanted to let you guys know for next Friday, we are very close to getting another batch of giveaway accounts for Apex. So they just announced a short-term deal. 80% off, and then the lifetime eval fee, like to go from eval to performance, is actually cheaper. Instead of $140, it's now $85. So this is actually kind of an interesting deal to take advantage of. So it's only 4 days out. Obviously, something like market open today, you could easily take advantage of the 50-50 strategy. Most likely at market open, we're gonna have enough volatility. If you know what I'm talking about, great. If not, go watch the video. I have a video of how to easily pass these evals, but something you might want to consider, because the promotion fee, the activation fee to go from eval to performance, is cheaper. And like I said, we are a couple accounts away. So don't forget to use that code GOONIE once again. You know what? I could even remind you guys right here. I'll remind you with code GOONIE. There you go. Now you can't even forget it. 80% off evals with code GOONIE. So I assume some of you are going to take advantage of this, but the more of you do, we will be able to give away more Apex accounts next week. So I just wanted to put that on everyone's radar. So if you want to trade futures, which is basically what I'm doing over here, great. That's where you want to take advantage of Apex, 80% off. And if you're more of an option trader, that's also great. Take advantage of Vanquish. Both of them, just use that code GOONIE, 35% off on Vanquish, 80% off, and a cheaper activation fee over here on Apex. And overall, that's going to be the fun in the sun today. Very quickly, we have a little bit of time. Great, we have time. So I wanted to do something a little bit special just to show you here, SPY. All right, so where is SPY currently trading? That's the real question. 6660 Equity Hub. This is something you might want to write down. This is something that could be of utility for everyone today. So I gave you all those SPX levels. Wait, last close was 661. Oh, was that 2 closes ago? Because we're at 660 right here. So 659 and 658, you can clearly see support. This is specific to SPY. So that's why I said you might want to write this one down, and I should probably write it down so I can remind myself later without losing my mind. All right, so you have a bit of, well, this would be 655 is big support. Then you have this set up at 658 by 59. And then from there, you have a low vol point at 664. Interesting. 667. Okay, and then the extreme reach target would be 670. So those are all key levels. Big support at right here, 655. You have some support between 58 and 59. You have a target of 664. That's the high vol point. And then you have another form of resistance at 67. And then you have actually people targeting 670. So that would be more of a reach target. Similar situation. Let's break down the NASDAQ for all my tech traders. All right, let me write this down just so I have them for reference myself. The Qs are currently trading at 595, 595, 595. Let's not forget that. 595, 595. We are right here. All right, so basically you have this thing at 592. Then you have 595, which is literally exactly where we're at. And then it kind of goes all the way up to 600. That one's actually pretty easy to remember. And here, I'll just double check it just in case someone is trading small caps, but they don't look the most exciting this morning. Currently trading at 239.50, 239.50, 239.50. You have support at, what is that, 238. Okay, cool. And then 241, 242 is going to be the breakout level on the small cap sector. And then from there, you might get a push to 245. All right. So those are your levels specific to SPY, QQQ, and IWM. But the real thing I want to drive home here is SPX. This is the thing that really rules the roost. So let's just zoom in. All right. So the first thing, and if you saw the update video, you kind of know what I'm going to say. But overall, you can see between 6,400 and 6,750, we are in positive gamma. We are above the zero line. All from here all the way to here, we are in positive gamma. When you are in positive gamma, generically, that is more of a mean reverting setup. If you go up, market makers sell. If you go down, market makers buy up. This is the full expiration. This is everything put together. And obviously, you can see interesting plays here at 6505. That's going to be the JP Morgan position that expires next week. You can see interesting plays at 6580, at 6,600, maybe at 6,650. So in terms of close plays, we are currently at 6623. So 6623, we're kind of at this node right here. You have a level at 6,600 and you have another level at 6,650. Once again, this is all expirations, not just the 0 DTE put together. But if you want to look at what's going on minus this, you can see the structure really changes when you take out the current 0 DTE setup. First of all, the positive gamma zone is way smaller. All of a sudden, you're at 6410, and you kind of see this breakdown at 6655. Which is where for the bulls, and I'm saying the bull side just because we're closer. Obviously, we're all the way over here. I'd be saying this for the bears. But since we are closer for the switch from positive gamma to negative gamma, that makes 6650, 6660, this 10-point region, very interesting because all of a sudden you have all of this negative gamma where things, price action itself can get a little bit more slippery. So I just want to put that out there that this 6650, in the event that we have a bullish day and we hold this zone and we get above it and it's not just a gap and crap type of a situation, this level right here is becoming incredibly important. And you could see why, because that's where we tilt from positive gamma getting over these nodes and fall into negative gamma. And then all of a sudden, if you can crack that 6650, 6660, well, that's like what I said, that's where price action gets slippery. And all of a sudden you start like to eye up these other key levels, 6675, 6670, but it's more of the manner in which it could go, where it could be that slow zombie-esque grind, the way Spot Gamma has been describing it, to all of a sudden it gets really fast. And if we see that play out today, it's all because of this phenomena right here. So I just wanted to put that on everyone's radar. I know it's a little bit more nitty-gritty getting into the details of like nerdy-ass Greek values as it relates to the world of options. But I figured just because we had a little extra time today, why not get into it? So that's obviously more of exciting for the bulls. I do want to remind you that the odds of a downside gap fill are very high. And to my understanding, we're pretty much opening up at those downside gap fill levels right now. So there actually might be no gap in the chart, or if there is, we're going to get it filled probably really early on. You can see the downside gap fill is to yesterday's high. The Qs, there is no gap as of right now. On the SPY, there's a very small gap. And on SPX, there's a very small gap. So the gap is basically all the highs from yesterday. That is the downside gap fill, which, like I said, is statistically a very high odds play. Is it a guaranteed play? No, but it is a very high odds play. And honestly, the fact that we're getting this pump and then the pullback, I don't mind it, because already knowing the odds and like just I've done this research. If we were sky high at market open, I wouldn't really know. I don't like that situation because I know the odds of the gap fill. So then the question is, do you lock in your gains and ride down? What if it keeps going without you? I really don't mind this. We see that the market has a little bit of bullish anticipation. We're not getting that much of a gap, which means right at market open, we can stabilize and just go from there. So I know maybe it doesn't feel the best right now, especially if you were excited like I was in pre-market trading. But in reality, this might be good. This might give us more time to really see what the market could do today. Of course, on the other side, it could just crap out if there's a bunch of profit taking and then we just get completely screwed. But that is the fun of being a DGen. You never know what you're going to get. All right, folks, market's about to open. What is everyone's best guess? Are we going to have a beautiful bullish day or a beautiful bearish day? Market's about to go dingity ding, ding, ding. I would love to know your best guess on the day. Ding, 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 ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Well, we are definitely seeing profit taking on the Qs because they just puked $1 in like seconds. Holy shit. The Qs really puked $1. Okay, I do have my bot on. I'm trying to be a little bit more reasonable here with my actions, and I'm trying to not do any of the manual trading. You can see my Tradeify accounts are still somewhat decent. They've been better, but they've also been worse. I have my Apex accounts. I myself am trying to take advantage of that cheaper upgrade fee from the eval to the performance. They're all up about 200. I also have some take profits right there. They're up the same. So the bot's on. I entitled this one Friday because I put in some specialty filters that are specific to trading on a Friday. So I'm hoping with that specialization that really not only do I make more money, but the overall goal is to avoid a couple bad beats here and there. So I'm looking to see if we have support at 24,600. That's a key technical level, key psychological level. Wouldn't be so surprised if people step in there. But remember that we are 1 minute into the trading day on a Friday that we just got an inflation report. Remember, what you see out of the gate is not the end all be all. It is very much not the end all be all. Obviously, as the market continues to open, I'm more than happy to show you the options flow. We can go back and check gamma levels, but I find that for the first couple minutes, sometimes it's better to just sit back and just relax and see how things like actually want to play out. What are we doing here? What in the world are we doing here? Coin can go all the way down. Avago. Okay. Just, are you guys seeing anything interesting right out of the gate? Any crazy movers? Tesla seems to be getting a nice pump. CoreWeave, not so much. Palantir, not so much. NVIDIA, not so much. Oracle, not so much. Avago, not so much. Microsoft. Apple, Coin. Interesting. Seems like the one really catching a bid this morning is people are buying that Euro sale dip on Tesla. So no more downside gap fill. That got, well, we're looking for that breakout of 35. Let's see if here, let me dive into the key levels here on Tesla for you. Let's see how the structure has changed. Equity hub, equity hub, equity hub, Tesla, 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 Tesla. Okay, yeah, 435 is that breakout level. And then you're kind of just talking all this junk in here. Not the craziest thing, 435. That's the big breakout for sure. I mean, it's the same situation it has been. Same situation. Technical breakout would also be at 435. So it seems as if 435 is becoming massively important. Mag 7 just caught a little bit of a bid specific to Tesla. It also caught a bid, but just also had a flow alert. I don't know if those people are buying or selling, so you might want to pay attention to it very quickly. Out of the gate, AMD, not loading. Do I just need to reload this overall page? Let me reload everything. Might be a bit faster for us. All right, so the SPY is catching a nice bid out of the gate. Apple is not doing squat. Avago not doing squat. Coin not loading. CoreWeave. Why do some of them load really quickly and other ones don't? Maybe I should go back to the Mag 7 here. Okay, Mag 7 caught a bid going a little flat, but remember, we're super early into the day. All right, so key levels. So we are breaking out of the transition zone. I'm telling you, 50 is important. Why is it important? Folks, I'm begging you to not forget. Like, I get that it's nerdy and people don't really like to get into this shit because it's more fun to just scream, oh, like we're squeezing, like that type of shit. Why can I not fucking type this in? Wait, am I on it? I'm on it anyway. It doesn't matter. I cannot stress the importance of, first of all, it is a level of resistance, but if we were to break, we tilt into negative gamma. Like, this is very, very important. And first, that means we have to overcome 50. Like, we're fighting up this mountain here, but if we can get to this summit and get to the other side, if we can clear this crux for all my, I don't know, climbers in here, that's where it can get pretty exciting. So it's a big if, and I don't know how shit's going to go, but I am saying we're also about to hit this little technical gap right here on SPX. So 6637, a little bit of an intraday target, perhaps a little bit of a technical level. I don't find it to be that interesting. I care more about 6650, but it would be cool to clear 37. It would also be cool to clear 43 this high. But I'm telling you, this is the zone right here, right where my cursor is, this 10-point zone from 50 to 60. That's where we really need to be on our toes and paying attention. Speaking of that, I think my position should be looking good. I was up 10K this morning, wasn't I? I've somehow given some money back, as if I'm not complaining about 10K, but I had some plays there. Tesla. Is Tesla going to break 3.5? How's NVIDIA looking? How's Palantir looking? How are my other positions looking this morning? Yesterday was so bad, I just didn't look at my account, really. And it's also not looking so good this morning. I need things to get pippity popping, folks. I need things to get pippity popping for me to make some money today. High vol point is 65. That's interesting. What are people doing here on Tesla? Minus the next expiration. I'm getting some alert. Microsoft alert? Microsoft. Technical reversal. Just put in a higher low. There is a little bit of a downside gap, though, but we were selling off lower highs and lower lows. Now we have higher highs and higher lows confirmed. This low, as of yesterday, clearly higher than the recent low, so a potential turnaround there. Let's do a deep dive into it. Is it worth the risk-reward opportunity? Should you be buying calls? Should you be selling puts? Let's see where the structure is on old Microsoft. And I am having some weird internet connection issue because some of my other pages are not loading as well. Mag 7, I think this is still loading. 37, yeah, so this is up to date over here. Oh, here we go. It just loaded. Where are we at on MSFT? 513. Not my favorite play. People seem to be targeting 515, but you're fighting up the... You do have support. I like the fact that you have support at 500, 505, and 510. So if you're bullish, you have quite a bit of positive gamma support beneath you. There might be profit takers at 515, but if you could get above it, you do have this arduous battle up to 530 before it falls down the positive. Support is so close. I think I might like it a little bit better for selling puts rather than buying calls. Just take advantage of bullish direction, but also theta decay and a little bit of IV crush as well. That I kind of like that a little bit more. Kind of like that a bit more on old Microsoft, but nice technical breakout. We're seeing a higher low, our first higher low of the day on the SPY right here. And also on the Qs at 936. So let's see if this overall trend continues. Obviously, the 5-minute breakout Oh, we actually haven't broken the 5-minute Orbo yet. We're about to. If we push a new intraday high, we will effectively have done that. But did we hit that 37 level? I don't think so. All right, so this is the structure. The question here is, are we just getting another bounce off the bottom of a channel? I'm betting on it. I have SPY calls. I have Q calls. I have Palantir calls. I have Core Weave calls. Like, I'm betting on this, but we're going to find out. Core Weave leaving a little bit to be desired. Palantir not really moving. NVIDIA, higher low. Oracle, Avago, Meta, Microsoft looking good. Apple looking decent. Coin not looking so good. Tesla looking fine. What about SoFi? What about MSTR? Not looking good. What about Open? Nothing. Oklo? Nothing. Rigetti? Looks like quantum computing is catching another wind. Or some of them are. Looks like Rigetti is. I have no... AMD, like Microsoft, getting another technical higher low, and maybe you're going to get that follow-through. Once again, on AMD. Interessante. All right, here's a look at the flow. Mag 7 did pop, kind of going flat right now. S&P 500 is looking good, continually trending to the upside. 5-minute, 10-minute, 30-minute, all bullish, and we're about to break that pre-market high. That's important, as I said earlier. But this 4-hour bar actually doesn't end until 10 a.m. I want to know the directional breakout of this bar. Today, from 6 a.m. to 10 a.m., a 4-hour bar, are we breaking to the upside or downside? Same thing. The Nasdaq is actually showing a bit of weakness on a relative basis right now. We are clearly farther away from that high. We were, around 838, we were all the way up at 596.60. So on a relative basis, the overall market's doing a bit better. You could even see it right here. The 5-minute Orbo broke to the upside, and then so did the 10-minute. So the SPY, thus far, the initial Orbo is breaking upward, and the Qs technically did to the tune of 2 cents, but then it just got clocked a little bit there. So I don't know, maybe there's a little bit of profit taking going on right now, and maybe we just need to wait for things to stabilize. But the Mag 7 had an upward trend. Now there's clearly profit taking. No one's touching puts, but the calls are getting sold, especially calls for today. So I'm not liking that. This green line are the calls on the Mag 7, the combination of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. As that green line goes down, that means people are selling calls expiring today. As it goes up, that means people are buying calls expiring today. The blue lines are the puts. As you can see, no one is really touching puts. So a little bit of weakness in the tech sector specific to the Mag 7. While on the flip side, you're actually getting no one touching puts on the SPY, but they are buying 0 DTE calls. And some people are also getting longer dated calls on the S&P 500. Speaking of which, we did just now get this little gap fill for the intraday trading here. I want to see it clear 43, but I'm really most interested in this test at 50/60, somewhere in this 10-point region. That's where I'm really, really paying attention. Really, really paying attention. Oh, brother. 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 Oh, brother, oh, brother, oh, brother, oh, brother, oh, brother. Okay. Fuck me. Do I want to do this? Oh, do I want to do this? Do I want to do this? Do I want to do this? Do I want Tesla calls? Chat, yes or no? Poll time. Here, I'm throwing up a poll. Hang on. Tesla calls right now. Yes. No. All right. Poll. I need you guys to answer it. This is going to be a 1-minute poll. I need you guys to answer very, very quickly. Is this high or low worthwhile to buy calls on? Yes, no, maybe so. Answer. Vote to your heart's content Vote, 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 vote. I'm giving you guys 1 minute. 1 minute. My financial health is in your hands. All right. I'm very interested in this 24747 area. We broke to the upside, but now we have weird higher highs and these lower lows. Will this be able to rebound and push all the way up to this pre-market high? The Qs are really having a tough time at the high from yesterday. Palantir is getting hit a little bit right now. CoreWeave is getting hit. NVIDIA is getting hit. Oracle's getting hit. Avago is getting hit. Meta's flat. Microsoft is still looking pretty good. Apple's looking good. So the second and third biggest stocks in the world are kind of leading us higher. And that's why the Qs are stable sideways, because two of the big guys are going up while seemingly the rest of the world is going down. So it's kind of netting out to not much. But where are we at over here? I really hope we don't undershoot this. I just want to see how we react to this 6650. It'd also be nice. I mean, why tech isn't, look at the Mag 7 right here, where people are just selling. They're dumping their calls right now. So we just need to, for the bulls to really pull this off today, this trend needs to stop. People need to, like, this delta can't be dropping, because as the delta drops, the market makers don't need to hedge their calls as much. They have to hedge their puts more. So they go from selling to shorting. It's the opposite effect. So whenever you see this direction of the delta, that gives you an idea of what the market makers are going to have to do to hedge out their books. So at first, they were hedging out their books by buying. Then they were doing nothing, and now market makers are being forced to sell once again to hedge out their books. Most of options trading is going to be a single dealer market, so you can make some pretty accurate predictions of how market makers are going to have to hedge. Don't forget the 10 a.m. report. So that is actually a good call out. Shout out to Dan there. There is another, you're getting consumer sentiment at 10 a.m. So that's going to be another thing that you should probably pay attention to. I'm actually a little surprised my bot hasn't traded yet, but I have a feeling it's because the Qs have gone nowhere. And even really, the first move was for the first 5 minutes. And ever since then, the SPY tried to go up. The Qs went down, then up, then down again. So maybe it's not that surprising it hasn't traded, because we trended for 5 minutes, 4 minutes, and now we've gone nowhere. So maybe I shouldn't be that shocked. Maybe I shouldn't be that shocked. I'm trying to buy lower, day profit 3K, take profit, but it keeps growing now up to 3.2. Ride the trend, dude. Ride the trend. All right, I'm going to end this poll. You guys are saying on Tesla that it is, in fact, worth my while. My question is, are you sure? 70% of you told me to get Tesla calls right now, and I asked you at 9:43. You guys are crazy. You guys are crazy. All right, when is my bot allowed to trade today? What are the time? I added some time filters. Oh, Buffalo man, what is your plan? Oh, Buffalo man. Kind of a smaller window today. All right, how is my shit looking? Whoa, hot tamale, brother. We're getting 14K and counting. That's not a bad trade. Well, golly gee willikers, that's not a bad trade. Hey, where's that guy that yelled at me for swearing? Is he here today? Lair Bear. Can I call you Lair Bear? Lair Bear, I've thought a lot about what you've had to say to me, and you're right. Swearing is just admitting to the world that I am a retard, because I can't find the proper words to express how I'm feeling. Bet the farm. Folks, don't forget, Payday Friday giveaway is today. It's pinned to the top of chat. It's in the description of the video. We're giving away Vanquish accounts. We're giving away cold hard cash. All you have to do is like, retweet, and follow. Shout out to Vanquish. Code Goonie, 35% off. And next week, if enough of you buy accounts today, we're going to be able to give away more Apex accounts next week. Once again, code Goonie. Code Goonie for everything. GOONIE will get you 80% off on Apex. It'll get you 35% off on Vanquish. There is no activation fee. And on Vanquish, the activation fee for the next 4 days is very cheap, very affordable on Apex. Instead of being $140, now it's like $80, $85. So if you want to take advantage of that, obviously have at it, but you have 4 days left. And Vanquish, like I said, this is the deal for today, 35% off with that code Goonie. And I have mine ready to go here. I just haven't done any trades yet because I guess I could have gotten in there at 40. I'm kind of waiting for this 10 a.m. report. How is the Mag 7? Did the Mag 7 pick up yet? Not as much as you would want it to. Not as much as I would want it to. I'm kind of watching Tesla's flow. What do you mean this product is not supported by Hero? Yes, it is. Yeah, just got another flow alert there. Someone is dumping calls on Tesla. That doesn't make me feel the best, team. No one's really touching puts, but they are definitely dumping calls. And it even got that. Whoa. Do I have to log back in? Should I log out, log in? Should I log out, log in? If that call selling can stop, this has a chance to get going. But once again, you need it to stop. Kenview, Tylenol, Mother Brand up 2%. KVUE. Yeah, it's probably bouncing back. I mean, I think people are starting to realize that President Trump's commentary on Tylenol was not backed by any actual science. And before you freak out at me, understand that his own administration has been putting out commentary saying, we didn't know he was going to say that. We don't necessarily agree. His own administration is separating themselves from his commentary related to Tylenol. I'm not a doctor. I'm not a medical professional. If you happen to be pregnant and you are thinking about or not thinking about taking Tylenol, go talk to your doctor. But what I can do, and the only thing I'm good at in this world, is looking at stats and correlation and causation. And President Trump's personal takeaway from the data related to Tylenol was, from a stats perspective, inaccurate. It was very much inaccurate. But whatever. I mean, literally his own administration. Tylenol said it in 2017. Yeah. Do you know why they said it? Because you shouldn't just be popping random pills when you're fucking pregnant. I mean, whatever. Like, you could take this opinion, but what I find so comedic about it is the same group of you who are more than willing to trust the president on Tylenol because he said something. There's probably also a massive overlap with you in the previous administration saying, I don't care what you say about medicine. You're lying to me about the vaccines. And my question to you is, how can you hold those thoughts together? Simultaneously, how can you think that at one phase, the government is lying to you about vaccines, but then in the next phase, you're willy-nilly trusting them on a different breakdown of medicine? How? You either are going to trust both or you're not going to trust both. Because if you are flip-flopping on that, that means you are literally just agreeing arbitrarily with the guy that you like, and you're not basing it off of any science or research or anything. They did lie to us about the vax, so they're not lying to you about Tylenol then. Like, from all of your extreme detailed research, you found out they lied about one, but not the other. Matt, take more Tylenol. Well, turns out I'm not a pregnant woman, so I don't have to worry about it at all. Well, one tells the truth and one lies. Oh, okay. So just arbitrarily because you like that person, that makes sense. I can tell that we are debating with the top brass here today. You can read research papers on the subject. Yeah. And in fact, I have the ability to give His own administration is talking out about him. The people who did the research are saying he did not interpret it properly. Like, what is the argument here? Like, his own administration is saying he didn't interpret it properly. His own, like, this isn't people from the other side of the aisle or anything like that. His own administration is saying he is not looking at it properly. What's your opinion on Northern Data takeover by Rumble, Tether, upcoming Rumble wallet? Net positive for Rumble. Apparently, Northern Data was raided by German police today. I didn't know about the raided by police. I have to look into it. But overall, I actually like them getting into the world of like data scaling. I like it. This is the first time I'm hearing about the German police thing. And I like the wallet thing. I'm a fan of crypto. I'm a fan of AI, these data centers, and especially the way it's going to work with Tether. Right away, they're going to be like adding that revenue in. So I like it, but I need to very much look into it. Why is Matt so biased? How am I biased? Like, that's what's so funny right now is people have such pea brains that they can't think for themselves. That's not bias of saying, hey, just look at it. And these are the same people who just don't understand correlation and causation. Like, my question to you, how is that biased? Like, directly answer this question. If you're arbitrarily believing Trump on his commentary on Tylenol, why is his own administration saying he is wrong? Dude, you are biased. How am I biased? Like, that's so fucking stupid. Explain to me how I'm biased. Explain, like, what? Just because I don't agree with you, that all of a sudden makes someone biased? It should be for any medication. Take as little as possible. Yeah. It's not like the easiest thing on your liver or anything like that. We were thinking for ourselves, and you're assuming we don't have an open mind looking at both sides. No, I just assume you're stupid because you sound stupid. You like clearly don't have the ability to break down basic stats and basic data. Like, I don't know anything about your open-mindedness, but my assumption is you're fucking dumb because you sound fucking dumb. Like, I don't know. That's just, see, he's closed-minded, crashing out. I'm not closed-minded. I've looked into it. Like, what's weird is I would bet my life saving you haven't looked into any form of the actual research. I guarantee you haven't looked at one peer-reviewed article, one statistics breakdown of what they found and what they didn't find. You're just regurgitating dumb shit that you've heard because you're a fucking sheep. You just are following what people told you to follow and told you what was right. Oh, and it's so sad. It's crazy that your vote counts the same as mine. Like, I think there should be a heavier weighting to people who actually can do research and have some sort of like basic cognitive ability. And I don't even give a fuck who you vote for. I just think that if you're as uninformed and as dumb as you are, that your vote shouldn't count as much. I read the X summary of the Harvard Meta. Oh, you read a summary. Congrats. Wow. He assumes we're all the same. He might be racist running around New York yelling at the minorities. No, I just assumed you're a dumb fuck. Which, I mean, to be fair, I have the evidence of it based on your commentary in this conversation. You're just like, nope, president said it to me, must be true. Matt, you're so superior. I mean, on this one subject, I know more. I'm sure on many subjects in this world, you know more. I don't think it's like a blanket statement of like X, Y, or Z. I'm saying on this one very like specific thing, I've done more research, you've done no research, and you are just like believing what you are told. Like, I think it goes subject by subject. So my knowledge on this subject is, yes, in fact, superior to yours. I bet there are many, many things in this world where you have a superior knowledge. Pregnant ladies should only take medication prescribed or okayed by the doctor. Well, of course. Like this idea of just like willy-nilly popping pills is stupid as well. Trump has told some Whopper guys, I voted for him and I'll probably vote for him again, but dude, he's lied plenty. Of course he has, but all of them lie. Like, what's crazy is you can still think Trump is objectively a good president, but also think that he's lied about things because he has lied about things. Also, guess what? Biden has lied about things. Guess what? Obama has lied about things. Clinton has lied about things. Bush has lied about things. Other Bush has lied about things. Reagan has lied about things. Every president has spun bullshit in their favor. And if you think the one guy you support is perfect across the board and has only ever done good and has never lied and has never twisted bullshit up, you are fucking idiotic. You are actually legitimately too fucking stupid to be on this planet if you think the guy you voted for is 100% perfect. It's called being an adult. If you can agree that maybe you voted for the lesser of two evils, but your guy's not perfect, that's okay. It's called being an adult. That's how life fucking goes. You're dealt with options and you try to pick what you perceive to be the best option, but it's just the better option. That doesn't make it the perfect option. And apparently that is lost on many of you. Don't believe anything that's said on the internet. Even this. Politicians don't lie, stupid. That's Tom from MySpace. Hey, buddy, you're not wrong. All right, we're about to get a consumer sentiment report is about to drop. Consumer sentiment. We got the upside gap fill. We're battling it out at 42. 50 to 60 is right here. This is the real zone that I'm getting excited about. No one thinks there's no faults. There's egregious faults on all sides. Clearly. Such as not being able to understand basic breakdowns of Tylenol. Like, duh. Like, that is one of them. And that's actually one that really doesn't matter. Like, it to me, like, the whole Tylenol thing is like kind of a small fries issue. Are they going to bring Rick back on for this one? I hope today. Are we going to get a double day of Rick?
Order submitted. Order.
Whoa, whoa.
Order submitted. Order filled.
No, that wasn't right. I mean, it was a winning trade, but it shouldn't have traded that. Fuck, what did I do? 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 Oh, wait, no, it was the right trade. Hang on. Everyone, if you have a horse, please hold it. No, it was the right trade. Hey, I did something right. Cool. $200, and it was proper. More than that, like, obviously I'm stoked I made money. I just wanted to make sure that the code was running properly, and it did run properly. That's sick. That's okay. That's dope. That's fun. That's fun. All right, give us Rick. Give us Rick or give us death. Did we get this? Oh, we're flirting with it. We're flirting with it. We're getting close. We're getting close. The author of the strat even said more studies need to be done and it's inconclusive. Yeah, but people don't read the study. They're literally, like, even RFK was like, I'm not sure about his takeaway. The dude who led the charge. Give us Rick.
Good Friday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber. We are live for you, as always, from Post New York Stock Exchange. Stocks are higher today, and it's a pretty broad rally. It's actually led by energy for a change.
Energy?
Best performing sector right now at 1.4%.
Come on, come on, come on,
Only
come on, come
one
on.
sector lags or is red,
What were the
and that is
numbers
consumer
right here?
staples.
Michigan lower than
Interestingly, this rally
expected.
is not being
Lower
led
than
by
expected.
technology for a change. Yes, there's strength in
At
Microsoft,
inline,
Amazon, Intel,
lower.
Tesla,
So the
but
Michigan
it's
numbers
really
is actually
energy,
why the market
utilities,
popped
industrials,
rather
and
than the
financials
consumer sentiment.
that are driving the market forward
Good
right
numbers.
now. We are pairing some of the losses
Good
from the week. Still negative on the
numbers,
S&P,
brother.
but less than a third of a percent.
Good.
Coming up this
16K
hour,
and counting.
New proposed tariffs on pharma, furniture,
Give
and
us
chip
Rick.
makers could impact your portfolio as investors try to keep up with a flood of announcements from Washington. Plus,
Is
Moody's
this the
chief
bottom?
economist Mark Zandi will join us with reaction to today's inflation print, how a government shutdown could muddy upcoming data releases as well.
Speaking of data releases, let's get some UMISH with Rick
Give us Rick.
Santelli. Hey, Rick.
Yes. Here he is.
Hi, Carl. Indeed, these are final reads for September on University of Michigan sentiment and inflation numbers and expectations for some improvement. The reality is each one deteriorated on growth. 55.1 from 55.4 is the headline number. It's still the weakest going back to May. If we look at the Current conditions, 60.4 versus the mid-month read of 61.2, also lower, but it doesn't change the comp back to May. And if we look at expectations, from 51.8 mid-month to 51.7, still the weakest since May as well. And on the inflation front, very similar, but in a positive way. We're expecting 4.8 on the one-year inflation. 4.8 was last look. The mid-month, it comes in 4.7. And the 5 to 10-year inflation, instead of 3.9 mid-month, it moves to 3.7. 3.7 would be comping to 3.5 in February. So the growth with respect to what's associated with when you look at Michigan sentiment, well, much of it's supposed to reflect the equity market. It's downgraded just a bit from the last 2 weeks. But if you look at the inflation indicators, they also moderated a bit. The market hasn't moved a lot on them, kind of a wash. And how do we summarize? Well, right now, 418 on a 10-year is up about a basis point on the session, but it settled at 413 last week, so it's down 5. And if you look at a 2-year, it settled at 257 last week. It's down almost 10 basis points on the week. It is virtually unchanged on the day. We did have good income and spending, and the PCE numbers rather sticky. Sarah, back to you.
Okay, Rick, thank you very much. Just some more color. According to the survey, a modest decline, as Rick mentioned, and it was broad across age, income, and education. Key exception, consumers with large stock holdings. Stock market obviously did very well in September, and so those consumers actually didn't feel as pessimistic, but everybody else did. Look, Rick just mentioned the PCE. This is the Fed's preferred measure of inflation, and the good news here is that there were no major surprises on the inflation.
Can it hold this low
front,
at 31?
Up 0.3%
Can we keep going with higher lows?
August.
Can this reverse
and then
back
if you
up?
look at core, it was only up.
All right, so initial reaction was positive, and then people used it to take profits. You could see starting here, 10 seconds after the turn of the hour, you started to see the hit. Price held steady, but alas, there was too much profit taking, especially zero DTE. You could see this green line, just calls getting sold, dropping the delta from 800 million down to below 400. So you had some profit taking. Let's hope that it stops soon and we could stabilize. We did take out the low at 955. We did take out the low at 951. And now the real low that I care about is right here at 945. Hopefully we could stay above it. Maybe it's a double bottom, or if it does break, praying, fingers crossed, that's one of those like flukes, like the fake out breakdown that people buy it. But this is exactly why you call out these levels. Look how high we got. We got to 49. We were within a point, folks. This is why you have to write down these levels. This is why you have to pay attention to it, because this is where people react. It is no surprise going into this level, people are like, cool, we are now taking our profits because they had strikes that were going from out of the money to in the money, especially on the zero DT. And they figure, okay, cool, lock it in. It's an easy Friday. This is why you have to know these levels, because of these exact things. This is where you're looking for the market to react. It is no surprise. Here on SPX, it's a little bit more evident. But if you're on SPY, you're going to say, what's so special about 662.37? It's going to look like a random ass level to you. And in a certain sense, it is a random level. But when you look at SPX, you could actually realize that not only was it a key psychological level, but you could also realize that it was a key gamma level. So no surprise we reacted. Obviously, I was hopeful. I was very much hoping that instead we would just break and keep going. But I can't say that I'm that surprised in all reality. Unfortunately, because there's just too much positive gamma. So I am looking for a higher low. We're kind of, well, we just cracked that low. I'm looking for a very quick bounce, either at 25, this 50 EMA. I'm hoping buyers step somewhere here in this 6-point region, because we have this low, maybe the overreaction. We have a key, another key gamma level. Look how quickly we just undid that. We got that slow zombie grind all the way up, and in a couple minutes, we gave it all back. Fuck that. So we're at the top of the transition zone now, looking for buyers to step in. But if you're asking yourself what's happening, people are unloading. They're unloading their calls, they're selling calls, and they're buying puts. And it all started at 10. Another 10 a.m. reversal, which we have seen way too many times. Way too many times. I don't know if you guys should be necessarily surprised by this phenomena at this point. I don't know if you should be surprised by this phenomena at this point. I'm worried. Is my shit going to accidentally fire when it shouldn't? Are we just reverting it all? Hopefully we just need some buyers. Like, if buyers are stepping in, this would be the level. Somewhere in this zone, you have the previous high, you have a transition zone, you have a key gamma level, you have a previous low, you have this 50 EMA. You want the bulls to step up right about now, but the Mag 7 just getting, like, we ripped up into it, slaughtered. We ripped up into it, slaughtered, lots of profit taking, and now you have bears even creating a couple new positions. But remember, this is just potentially an overreaction to what we've already seen. Potentially an overreaction. I got in and out real quick, so I'm not going to complain. I was able to lock in. Some of these that's some slippage. Some made 440. Some made 535. Some made 275. So quite the gambit there of slippage. Anywhere from 275 up to 535, a clear, large amount of slippage. So whatever. It's green across the board, and if this is my only trade of the day, it's my only trade of the day, so be it. But I'd rather just end the day green. But I didn't want this to dip as much as it is, and it's still dipping. It is still dipping. I'm not necessarily seeing bears came in a little bit, but it's a lot more like profit taking, in my opinion, than anything else. I could tell you that calls are being sold, but that doesn't necessarily mean are they being sold to open or sold to close, STO or STC. We only really get that information after the day completely settles and we see the overall net change in OI and whatnot. But because it is zero DTE trading and understanding the patterns of just a lot of people are degenerately going long calls and long puts. When I see it dropping, I assume it's selling to close. It's a safe assumption. It's not necessarily statistically 100% accurate, but it's more accurate than not to assume that the zero DT positions are going to be those long positions rather than short positions. So like I said, I'll be the first to let you know that is, like, you can't say that with 100% confidence, but that is what I am looking at. Look at that bounce. Look at that. Just, we got that report. People liked the Michigan numbers. That was the pop. And then boom, slaughtered because of, I guess, the overreaction. Honestly, it might not even be the overreaction. Maybe whoa. Someone just bought calls. Someone's getting back into calls here. Hang on. Are we finding support are they choosing to buy right at this open interest level? If this loads, you're going to see 2.5 has this big gamma, and we're right at 2.5 now, and we just saw calls spike once again. So I wonder if we're seeing an attempted bottoming formation. I'm curious if we're actually going to be able to bounce out of this junk. In my book, if we can recover this zone, but here, let me, this might be a little bit easier for everyone to see. This is pretty much the full sell-off right there. Just this white block. That looks like this block now. Sorry. I'll go back. I'm trying to just not confuse people. This block right here, you can just see from 10:02 to basically 10:07. Big block, which was all of this profit taking. In the event, remember, a lot of the times trading is an if-then statement. If this, then that. So you wait for the if to happen, then you know you're in that Bayesian conditional probability. Then you're looking for the then statement. If this, then that. If the market can recover this whole block sell-off, which was pretty much spurred by all of this call selling, zero DTE call selling, then the market's kind of telling you that, hey, they got it wrong. And equilibrium, aka price, when you're talking about market equilibrium, that is like the same as saying price. If we can push all the way back up through this zone, it's saying that, no, this equilibrium is wrong. And the sell-off was just some like bullshit short-term zero DTE phenomena, and we are recovering back to where, quote unquote, the market perceives that we should be. So I'm looking for the bounce in here. We have a lot of reasons for people to buy here. Will they or won't they? I don't know. I'll tell you better at the end of the day. But what I can tell you is this is an interesting level to watch for a potential reversal. So, I mean, we have the gamma level, we have the top of the transition zone, we have yesterday's high, we have the low from 2 days ago, we overshot the 50 EMA, and putting that together, I'm seeing that the puts are flattening out, and I'm seeing people are getting back into calls. So let's see, is this going to be the bottom? The old 10 a.m. to 10:10 Kansas City shuffle, the pop to the drop. Dude, unless the fact that the Q's basically in 15 minutes, not even 13 minutes, basically going from an intraday high to the low, it shows you that influence of the 0 DTE. It shows you the huge influence of the 0 DTE. And I don't know. I wish I could tell you who's going to win this battle, but remember, let's think about what that means. Like, are we going to bounce here or are we going to vomit here? Remember, the breakout or the breakdown is exclusively defined and determined by people who are about to trade. Big, medium, small size, all of it together in aggregate, who's going to win out? So unless you know what every trader in the world is about to do, it doesn't matter if they're high frequency trading, it doesn't matter if they're hedging their portfolio, it doesn't matter if it's a fat finger mistake, it doesn't matter if it's a retail trader, hedge fund, bank, insurance fund, it doesn't matter. To know this breakout or breakdown in aggregate, you would have to know what everyone in the world who's about to trade is about to do. Are they going to buy? Are they going to sell? What is that net impact? And then from there, if you had the answer to that, you would know if we're about to break out or break down. But I'm setting it up that way for you to understand the mathematical incapability of having the answer to that question. The next bar, whether green or red, is about to be determined by people in aggregate, like I said, across the board, from the quickest high frequency traders to a long-term investor at Berkshire Hathaway, either hitting buy or sell. You round that all up, and then that's going to be the next bar. And then guess what? You do that for the next bar, and the next bar, and the next bar, and the next bar. So the fact that we don't have that information, as in the knowledge of what everyone who's about to trade is about to do, it tells you that you can't predict. You can't predict, are we about to bounce or break? All you can do is react and be like, okay, cool. We got up to a key level. We were watching for a reaction. Guess what? The reaction went to the downside. We sold all the way off to another key level. And guess what we do here? You just sit there and you wait for the reaction. The game of active trading, scalp trading, swing trading, day trading, that type of shit, it's just reacting. It is not predicting. If you're attempting to predict a breakout, a breakdown, a bounce, a reversal, a fake out, any of that shit, you're so far behind the ball of what you have to be doing to be profitable that it's actually kind of scary. Prediction does have its place in the markets, but it's more of the longer term, and it's predicting, will certain themes be more or less popular? Will NVIDIA, you could predict maybe accurately or not, will NVIDIA be able to continually, ride the AI trend and make more deals and sell more and more GPUs? So that's you predicting a trend on a thematic phase, a push. You're predicting, will the management of the company be able to, successfully execute upon whatever ideas? Okay, those are all fair, reasonable predictions. And maybe you're right, maybe you're wrong. But the reason you could predict that and not active trading is because the longer your time frame, you're getting away from noise. And what I mean by that is, NVIDIA, you might have this overall prediction that NVIDIA maybe will properly be able to crush AI. But guess what? In a short term, it can have a red day. It could 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 have a red week. You could look at the week. Yeah, there are red weeks. But guess what? If you predicted that it's riding the AI hype train, well, basically from 2023 to now, you haven't had much to worry about. Yet, with that being said, there were certain periods of weakness, like opposite of what you predicted. Even though your prediction is overall right, there are counterexamples, whether on the 1 minute chart of, oh no, that's a red bar, or on the 30-minute chart, oh no, that's a red bar. So that's why in the longer duration, predictions are reasonable, because you're giving time for your prediction to play out. The shorter your time frame, and you could get all the way down to microseconds, or maybe you're just day trading, looking at the minute to 5 minute. Pretty much anything below the daily chart from a math standpoint is indistinguishable from noise, as in it is randomness. If you do an analysis on the 1 minute bar, the 3 minute bar, the 5 minute bar, the 10 minute bar, it's almost perfectly normally distributed. Half of them are green, half of them are red, and it follows that perfect Gaussian distribution of on the wings, you have some big bars, but most of them are small bars, and they're just 50-50. That's what short-term data is made of. Technically, if you look at the daily chart and you do the same analysis, you're going to get somewhat similar answers, but there is a slight skew. 54% of the bars are green, and obviously 46% of the bars are red, which kind of gives you an idea of why over time we slowly but surely drift to the upside. There is about a 4% edge generically in the S&P 500 for the bulls. So the way when people go to a casino and you talk about like the generic edge of like the house when you're playing blackjack or something like that, and what is it, like 1% or something like that, in the overall market, given any arbitrary day, if you were just to pick a day and you had to bet bullish or bearish, it's not technically flipping quarters. It's technically flipping quarters, but the one side is slightly weighted. The bulls do have a 4% edge, and that's just like looking at literally all daily bars for the past like 2 to 3 decades. There is a small edge, and of course you can refine that analysis and find different edges for maybe a week of the year, month of the year, day of the week. Like the edges go up and down. But if you look at every single day in aggregate, there is a slight edge for the bulls. And yeah, even this in an election year, yeah, you could do an analysis on election years. You could do an analysis on odd years, even years. You could do an analysis on how years react after the previous year was a big gain, after the previous year was a big loss. Like there's literally an infinite amount of forms of analysis you could do on this. Infinite amount. All right, I'm curious if the bottom is actually going to be found here. If you look at the flow, we were looking good until 10. Then we got hit, a lot of profit taking. We try to recover, getting smacked. So we're kind of now in this like no man's land of which fucking way are we going? The Mag 7 is actually worse off. You're getting a lot of people selling their calls on the Mag 7 plays. A lot of people selling. And at a certain point, like there's not an infinite amount of selling. Eventually all selling ends. Eventually all buying ends. It's not like there's unlimited money and it just keeps going and going and going. So the question here is, will this actually stop, and can we create the base here and basically bounce out of this zone? Or are there people who are holding on and they're like me, praying for the bounce, and then there's basically too much heat in the kitchen and we get cracked? If I could tell you that, I would, and we'd all be making a bunch of money, but all I could tell you is we have to sit here and wait. There is decent chance of hitting 6604 today. That is yesterday's closing value on any given day. The odds of hitting the previous closing value is very, very high. The S&P 500 hasn't done that. The Nasdaq's already done that today. Just because the odds are high, it's not guaranteed. I'm thoroughly surprised at the size of this hit from here. I was expecting a pullback to 30. I thought it'd be a 20-point hit. I did not expect a 30-point hit, and I'm saying that fully admitting that we might not be over yet. So, actually, this is a great time. As we're waiting for this, let me, here, I'll set this alert. We'll also set, I guess, an intraday low alert. All right, so we have some alerts just in case there's movement, but it seems to be slowing down. We might as well get somewhat rocking with the Payday Friday giveaway. So go to my Twitter page. It's also pinned to the top of chat. It's in the description of the video. If you don't have a Twitter account, you're shit out of luck. I don't know what to tell you. We're giving away 5 different Vanquish accounts. Obviously, shout out to Vanquish. Use that code Goonie to get 35% off. Vanquish, if you don't know what it is SIM-to-funded options trading, which is opposed to Apex, which is SIM-to-funded futures trading. So basically, if you want to trade futures, check out Apex. If you want to trade options, check out Vanquish. If you want to trade both, check out both. Anyway, we're giving away the Vanquish accounts. They are the sponsor of today's show, so show them a little bit of love. And 35% off if you just want to buy one yourself. There's no activation fee. So we're giving away those today. And if you happen to be trading on Vanquish, like I probably should have played that rejection. Damn, that I actually missed out. Obviously, I wish you the best of luck. But on top of that, not only are you getting the Vanquish accounts, but we're also going to be doing a marble race where the winner is going to be getting $200 of cold hard cash. Generally, it's $150, but today the pot is a little bit sweetened by Real Spicy Chef, who yesterday sent in some money and he wanted the prize to be a bit bigger. So I don't know if he's in chat right now, but if he is, everyone give a little bit of a round of applause to Real Spicy chef, making today's, I guess, marble competition that much more exciting. So we're going to be doing that probably around 10:30. So I'm going to give you guys a couple minutes to figure out how to like, retweet, and follow. That's all you have to do. It is free for everyone to enter. If you are watching this and you have a Twitter account, just go to mine at Matt_Kohrs, like, retweet, and follow. Just do those 3 things. It is not difficult. It is my pin chat. Here's my account at Matt_Kohrs, still long tulips. You're going to see it right here. All you have to do is like, retweet, and follow. I see some people liking it, but not retweeting it. So actually, your odds of winning right now are very good because people simply cannot follow directions. You have to like, retweet, and follow. So all these people liking, if they didn't also retweet it, they're not going to get involved here. Oh, wait, it just jumped up a shitload. That must have been an issue because we're almost perfectly at par. So there's only 11 people who messed it up, but hey, I guess that's a them problem. All right, we're still potentially looking for a bottoming here on the S&P 500. The issue of why we're not is because the Mag 7 is just getting slaughtered. It's just getting slaughtered right there. Like, you just, this flow starting at 9, it's not even waiting for 10. At 10, it got a little bit of reversal, but really starting at 942, 943, it's been nothing but down. So for this to have a bit of, and no one's even touching puts. They're not betting against it. This is not bearish bets. It's people getting the fuck out of calls. They're getting out of, the green line is the calls expiring today. And you could see really starting at 935, people have just been hitting that eject button. And on this pump up until 10 a.m., they really took advantage of it. And they're just selling into it. So I, like, the SPY's trying to recover. And unfortunately, there's just too much selling. There's too much what I perceive to be as profit taking in the Mag 7 right now. Too much profit taking in the Mag 7. So if they can stop that, then we have a shot at a bounce. But all I can tell you, all the measurable data right now is they are selling like there is no tomorrow. They are selling like there is no tomorrow. Jesus, that's just getting fucking slaughtered. What time is it? Yeah, my bot right now it's in a sleep window. If it remains this bad, it might start trading again. But because we had so much positive momentum this morning, it has to undo all that positive momentum. This is turning into a fucking mess today, folks. We got a 30-minute Orbo breakout to the upside on both the SPY and the Qs, and now we're about to have an hour, the initial balance, which is the first hour Orbo, breakout to the downside. This 10 a.m. report was just used to basically prompt a vomit. Everything was looking great this morning. We had such an opportunity for an exciting breakout and rip on this key level, but in fact, the key level was used to sell, and people just took their profits there, and thus far, they have not stopped. I mean, actually, look at the, holy shit. Now people are actually buying puts on this breakdown and still selling calls. So now it's speeding up because at first, no one was touching puts. Now they're selling calls and buying puts. And then the Mag 7 is no one's touching puts, but they're aggressively getting out of their calls. Like I said, sell-offs can't happen forever because there's not an infinite amount of money for people to exit, but they can do it for a lot longer than you want them to. A lot longer than you want them to. All right, we are coming up to that close value, 6604. Like I said, high odds play of hitting that value, and it looks like today's going to be that example. And then there's going to be support there, but if anything, the major level, the way I expected a lot of people to react to 6,500, or excuse me, 6,650, I'm looking for that at 6,600. I'm hoping that buyers decide to step in right there. I'm getting alerts on coin. Apparently coin's breaking down. Yeah, coin is taking out some of these recent lows. That doesn't look so good. Microsoft is the only green thing. CoreWeave is getting fucked. Hut is getting fucked. Jesus, dude, this turns so rapidly. Man, talk about a change of tune here, folks. We went so quickly from everything amazing, everything looking great, knocking on the door of a breakout. The point was you guys were all telling me to get in calls here. And now Tesla's getting murked. We're at the closing value from yesterday. We are at that closing value from yesterday, and we're in the transition zone. I was hoping that people would buy here back at 10.10, saying, okay, a little bit of an overshoot, a little bit of a fake out, and then we'll bounce back up. But it turns out that there was a lot of aggression on the look at it. It's just not stopping now. Holy fuck. It's like really, it's actually accelerating. People are panicking a bit. We've seen bigger numbers. I don't mean to say that this is some sort of outlier in terms of disaster, because it's not, but it's just, it's crazy to me of how much we changed. We were looking great to nope, no longer looking great. It changed just like that. But to be fair, the exact opposite can happen. As much as we are sitting here right now saying, wow, that was bullish, and oh, wow, that was so quickly taken away. Folks, both things are possible. We just came up to clear levels of support. Clear level of support. We could easily bounce, fight back up to 35, and then the party's back on. Easily. On the flip side, we could also crack 6,600 and puke all the way down here. That it's just, I find that a lot of retail traders have recency bias, and whatever happened, they think is just going to keep happening. And that's somewhat true with respect to the market is trend following. But remember, we're trying to identify the levels where things might reverse, such as we did exactly here at 10 a.m. Such as right here, maybe an initial bounce. Nope, no bounce. All right, we identify the next level. Maybe we bounce out of here. Totally possible. You just have to kick back and watch and try to play it with low risk. I don't think it's the craziest thing if we take out this recent 5-minute high to go long and you have well-defined risk at the recent low. I'm not taking that play because I have to host this Payday Friday giveaway. But this bar is about to end in about 22 seconds, and we're officially going to be an hour into the day. We've been recently marking a lot of market reversals 30 minutes into the day and an hour into the day. Granted, there's been more reversals 30 minutes into the day, but regardless, you get my point. If we take this out, I mean, you're already seeing that we're at support. Buyers are stepping in. You shouldn't be surprised about this. The question is there going to be enough buyers stepping in to now reverse this trend? So I don't hate this trade. Remember, with most trades, you're going to about have 50-50 accuracy. So bet size is important and risk management is important. But if we were to take out this recent high and you try to play that long and your risk is this recent low, if that happens with a nice continuation in the options flow, I actually think that's a nice play. I really do. I don't know how it's going to play out, and I'm letting you know before it happens that I'm not playing it. In fact, when's my shit allowed to trade? What time was my first trade? 10:10. The next time it could trade is 10:50. There's a delay here, so I can't even trade right now. That I put in certain delays on my code that it's just going to be chilling. But from a technical perspective, we popped up. We're still on the bullish side of things. We pulled back. This is a level of support. When you come to levels of support, it's a 50-50. Do you bounce or do you break? But even though you are flipping quarters of 50-50, the way you can be net profitable in a 50-50 game is when you're risking a lot less than you're making. So half the time you take a small loss. The other half of the time you have a big win. Big win multiplied by 50% minus 50% of the time when you have a small loss. That's how you're net profitable. So I really don't mind this. If we take out this recent high, your risk is this recent low, and you're just praying that this truly is support. And a way that you could be more confident about it rather than just like the technical bounce is looking at flow here. Mag 7 showing a little bit of life. I'd prefer a bit more in all reality, but let's wait and see. Maybe I'll take it on Vanquish. I could set up this alert. I'll take it on Vanquish instead of just talking the talk. I'll walk the walk with you guys. I'll walk the walk. I'll walk the walk. 6625. All right, I have it ready. All right. Buy to open SPX 6625. Okay. I have it primed up. I'll let you know if I execute it. I mean, but you guys are going to know because you're going to hear the alert go off. This alert right here. I'm waiting to see if this high is taken out. Obviously, I'd prefer that we don't make a new low because that might change the structure because obviously based on the 1 minute, lower highs, lower lows, waiting to see if we can get a higher low, take out this high. I will execute that trade. It's going to be a market order. If I do it, well, you're going to know I'm going to do it when you hear this alert go off because that would be my entry signal. And like I said, I would want it to be, the confirmation would be the delta actually pops up the way it is a little bit right now. It's showing a little bit, it's showing a heartbeat, but the price, not so much. The price, not so much. Yeah, we showed one attempt. Potential bottom. It is a fresh lower high. So we, as of now, are continuing this trend. But I'm just curious, can we take out this high without puncturing this low? Then that's where, from a technical perspective, it starts to get a little interesting with relation to the question of, are we going to bounce? Because we have yet to see that type of a candle bar reversal setup. And also it's right off of a key level. So I'm just kind of waiting. I'm trying to be patient. I don't want to try to predict that it's going to happen, but if it does happen, I want to react to it. So if anything, I think this is a good real-time example of what I try to say of don't predict, react, of like, okay, I personally believe this is a key level. Now, just because I believe it's a key level doesn't mean I'm just going to arbitrarily trade it. But I think that there might be a chance of a reversal. Okay, maybe. If it gets above 11, if it gets above 12, that gets interesting. It gets interesting. Will it? Won't it? I don't know. Coming back to the flow, the Mag 7 is at least not bleeding anymore. The SPY, we have a little bit of a pop, maybe a higher low in the Delta reading. But we have the alert set up. If it happens, it happens. I'll react to it. If it doesn't happen, it doesn't happen. I don't think we need to overcomplicate it. I actually find that the best traders have somewhat simplistic systems. They just stick to it slavishly and they don't really do anything else. They don't overcomplicate it. It's just the same thing day in and day out. And in all reality, I would actually argue that's like my biggest downfall, my biggest Achilles heel of being a trader is somewhat getting, I guess, bored and sitting around and while nothing is happening, be like, oh, I think I see an opportunity and I trade on it. And in reality, that opportunity isn't a real opportunity. It's me just being bored, like wanting to do something rather than actually having a good statistical setup where sometimes I get into trades. It's a good trade. And even though I understand there's a certain percentage chance it goes against me, when it does go against me, I don't cut it when I should cut it. UK drones strike oil inside Russia. Well, that's probably not good. Probably not ideal. Anyway, while we're waiting either for this breakout or breakdown at a key level, and like I said, I'm primed up. It's on my Vanquish account. It's a market order. I'm ready to go. We are going to get rocking with this Payday Friday giveaway. So if you haven't already, I'm going to give you one more minute to like, retweet, and follow. It's pinned to the top of chat. It's in the description of the video. If you're on Locals, I emailed it to you. If you're in the Discord, it's in there. Or you could just go to Twitter at Matt_Kohrs, Kohrs. Just like, retweet, and follow, and that's how you get entered. Seems like a lot of you already figured out exactly what you have to do. The 5 winners will automatically be getting a Vanquish account, and then from there, I'll be taking all of you guys, putting you in a marble race, and the winner of that race is going to be getting $200 of cold hard cash. If you want to continue with this, hang on. Is that me? Yes, it is. Boom. Confirm and send. Create order. Boom. In. 840. Close with this single order. 840, 940. All right, we'll see how it goes. Obviously, as I told you, well-defined risk. Looks like a little, well, hang on. The SPX got its break, but SPY didn't. Look at here. SPY didn't crack it. The Qs did. SPY didn't, but SPX did. Interesting. And now I have well-defined risk. I could use this one. I could use 6607 if I want. We'll see how it goes. All I know is I have minimal risk. I have probably a 50-50 shot of this working, but my reward and my risk are skewed asymmetrically, which is why you can be profitable in the long term. All right. I'm feeling like maybe this giveaway needs to be $250. Love the show. Maybe I'm just a simp for cats and chairs. All right, we will up it to $250. Shout out to Real Spicy Chef, sweetening the pot that much more. Pregnant ladies should only take a medicine prescribed by. Okay, Paul, I agree with that. But shout out to Real Spicy Chef, throwing $50 more into the pot. So now the winner of Payday Friday giveaway. The winner of the marbles race, it's not 150, it's not 200, it will now be 250. Hang on. All right. I want to watch Tesla here. There might be an opportunity for me. I'm watching 428. Oh, look at that. Interesting. We just cracked that. Bada bing, bada boom. Locked in that trade. $1,500. Folks, all called out real time to you. I explained the trade, and then we sat there for minutes waiting for the proper reaction. I explained exactly what I was going to do to you. I said market order. I gave you the strike. It was all done in real time. None of this Monday morning quarterbacking bullshit. For minutes, I was explaining the exact trade I was going to do, and I just locked in 1.5K off of it. Folks, it is very rare that I get something so incredibly fucking right. And the fact, come on, that deserves a little. That deserves a little something, something, a little something, something. Dude, fucking nailed it. Nailed it. And whether you believe it or not, whatever, I made 1.5K off of it, all shown in real time, called out before the trade happened. I explained exactly what I got in. I told you my profits, my profit target, and now I'm showing you the result of the whole thing. There's not much more hand-holding I could possibly do. There's honestly not much more hand-holding you could do beyond what just occurred, right now. Anyway, I'm happy with 1.5K, so I'm shutting that down. All right, let's do this giveaway. All right, what I need to do, first we need to find our competitors and also the winners of the Vanquish account. So let me get ready. And actually, you know what? In the background, let's get a couple tunes going. Let's get a couple two-tree tunes going. Remember, we give out all this music for free. Tendies, at Tendies and tunes. All that music you guys hear in the morning, we do give out for free. It's Payday Friday. Yes, it is. All right. Twitter picker. All right, let's go to the Twitter picker. Close pop up. Oh, hell yeah. Yes, it is. All right, I have this tweet. You have to like and retweet and follow. Great. Let's get our 5 people. These people automatically get a Vanquish account. Automatically. All right, congratulations, Charlie Moon, Jay Keith, Dark Magadad, Elon Muskie, and A1 Perception. Oops. Fuck. Well, now this is awkward. Who were those 5 people? God damn it. I accidentally hit the button when I shouldn't have. Who remembers it? It was... Who remembers those names? We just had those 5 names. I know... Fuck it. I know how to find it. I don't want to fuck anyone over here. View your channel. Hang on. There we go. I would have never thought of Charlie Moon. All right, so we have Charlie Moon. We have Perception. Elon Muskie. We have Dark Magadad. And we have Jay Keith. All right, we have all 5 of you. I will be reaching out to you. Actually, let me screenshot this so I don't lose it again. We don't want to be that guy. We don't want to be that guy again. All right, so I have that. I'm saving that. All right, we have, congratulations. If you identify as Charlie Moon, A1 Perception, Elon Muskie, Dark Magadad, and Jay Keith, congratulations, you won a Vanquish account. They will be DMing you today, so for them to be able to DM you, you need to follow their Twitter account, just in case your DMs are locked. So if you are Charlie Moon, A1 Perception, Elon Muskie, Dark Magadad, and Jay Keith, go follow the Vanquish account right now so they can DM you and give you the coupon code or whatever it is so you can get that free account. So, all right, we have you guys. And now, all right, we don't need that. We don't need that. We don't, dude. Hang on. I'm thinking about doing something stupid. How fucking dumb do I want to be today? I'm down money. Hang on, I'm thinking about doing something dumb. I'm thinking. Hell yeah, dude. All right, I got back into Tesla calls. All right, let's get the... Dude, this song slaps. Let's get marbles going. Big players are buying a little today. Oh, fuck yeah, dude. All right, let's get the people who are racing. We have Charlie Moon. We have A1 Perception. We have Elon Muskie. We have Dark Magadad. And we also have Jay Keith. We have Jay Keith. All right. We have our 5 competitors. Good. All right. Ooh, we're doing the snow globe one again. All right, hang on. All right, folks. You guys know what is at stake. This is a winner-take-all marble race prison rules, as in there are no rules. All that matters is being the winner. The winner is not just getting $150 of cold hard cash. They're not just getting $200 of cold hard cash. They are, in fact, getting $250 of cold hard cash. And you know what? Hang on. How do I get out of this? The reason the numbers are up. Nope. Discard and exit. The reason the numbers are up are because of a longtime viewer, Real Spicy Chef. And you know what we're gonna do? We're putting him in here. Real Spicy Chef. He's gonna get an opportunity to win his money back and a little bit more. So we're not just doing 5 competitors. Here, let me do a random map again. We have the 6. Nope. I want to make sure he's actually in there. 6. Did I get him in there? Yeah, okay. Finish. 6. All right, he's in there. A little bit of a just a little something to make it a bit more exciting. So we have Charlie Moon, A1 Perception, Dark Magadad, Real Spicy Chef, the guy who made the pot that much bigger, Jay Keith, and Elon Muskie. Winner takes all, marble race, prison rules. All that matters is winning. Is everyone going to survive this? I have no idea. As you can see today, the track is quite wet. It's quite slippery. Accidents do happen. Folks, I promise you, you are not going to want to blink. Do whatever you need to. Scotch tape your eyeballs open. Staple them to the top of your forehead. Do not blink. These are 6 of the fastest competitors in all the land, and one little blink might make you miss the entire thing. Before we get going, before we have all these racers start their marbles engines, who are you guys betting on? Who are you guys feeling has the real opportunity to rock this today? Who are you putting your money behind? Who do you think is rested, has trained, has that dog in them? Who are you? Jay Keith. We have a vote for Jay Keith. What other votes do we have going down? What other votes do we? Keith's got 2 votes for Keith. Wow. Spicy. All right. 2 votes for Elon. I'm going Charlie. All right. Wait, Real Spicy Chef. One of the racers is voting for Charlie. All right. We've heard crazier things, and now all of a sudden I didn't want that to happen. Hang on. Let me get the right song because we're going to get rocking very soon. What is the song? Oh, here we go. No. I just saw what I wanted. Here we go. All right. And race is starting in 3, 2, 1. We are off. 6 racers, only 1 champion. All right. Who's going to get this first drop? Let's zoom in here. Let's see the track. A1 Perception making a good start. A1 Perception getting the first drop, choosing the left path. And actually, they all are beyond Elon Muskie choosing the right path. A man of his own path, I suppose. Uh-oh. Oh, fuck. We're trading, too. What? I don't know what's going on with the trade, folks. We got a race going on. We have a little bit of Swiss cheese. A1 Perception going good. Jay Keith leading the race. Charlie Moon trying to extend his lead, followed by Jay Keith. All right, we're going to a second drop, and it looks like we're getting shot off into a tornado. Charlie Moon leading at the moment. A1 Perception hot in pursuit. Uh-oh. Here we go. We're going through a rocket into a tornado. I wish I were home. Here we go. Will Charlie Moon make it? Uh-oh. Caught in the tornado. A1 Perception making the drop first, taking back the lead. And now we are... Oh, Charlie Moon is dead. Jay Keith is dead. Dark Magadad. Elon Muskie is dead. Everyone's dying. This is now between A1 Perception and Real Spicy Chef. Uh-oh. Real Spicy Chef is now also dead. Can A1 Perception survive? Folks, this is no longer a race. This is just a battle of survival. The wet track proved to be too slippery for all competitors but one. We are no longer cheering along a victor. We are cheering along survival. Can A1 Perception pull it off? Everyone else is dead. There's marble bodies on the floor. Can he survive? The one and only. The one and only. Folks, A1 Perception using his skills of perception to survive. Everyone else dead. They died. The cannonball into a tornado did not go well. It did not go well. Let's be honest. We're going to have to up the insurance for the show because when you have that many bodies on a weekly basis, it just doesn't turn out well. But folks, join me in putting your hands together for A1 Perception, showing everyone what's what and who's who, the victor of an enlarged prize pot of $250. Whoa. All right. And I traded something. Oh, I made money. America. Apparently I made money on a short trade at 11. Is that right? Yes, it is right. Okay, I'm not going to complain. 700, 600, 600, 500, 500, 500. These are up at 1,000. I trade these a little bit bigger because they are bigger accounts. So thus far, looking good over here on the scalps. Looking good on the scalps. We had a little bit of a pop. Unfortunately, lack of follow through, which is going to be complicated. But the question is, are we going to have the old George W? Are the bushes going to help us here? Is this a double bottom W breakout, or is this an A, B, C, and then the death of a D? So we're going to be finding that out very, very shortly. So right now we got a bounce. The bounce was faded. The question is, from here, double bottom rip or just a continuation to the downside? Here's a quick look at the flow. We did pop. Mag 7's giving a little bit back. Same thing on the SPY. We did pop, giving a little bit back. And obviously at the start of the race or during the race, you guys heard that trade. And it looks like I took a short here. Let me zoom in a little bit more. You could probably see it a bit better right there. It took a short at 1050. It should have been short earlier. It should have been. It was off by a bar. Right here, this EMA crossed over. It should have been short 1 bar earlier, which might not seem like a big deal to you guys, but it's very much a big deal to me. That's right. Yeah, we crossed. It should have been short on this bar. It was a bar late. I must have fucked something up. I fucked something up. I'm stoked I made money, but you have to understand, like, the code didn't do, like, sometimes you do random shit and you make money. We closed. It's a bar late. There was a bar delay. It should have been short at 74 right here at this open and wrote it down for 1 bar. Instead, it got short at this bar and wrote it down. And I got lucky that this bar was also red, which was the direction I played, but something is off there. The EMA crossed over. Yeah, something's wrong. I got to figure that one out. Anyway, the SPY popped. It sold off, popped again, sold off again. We have a lower high. We have a higher low with respect to the delta flow. And now we're just going flat, waiting. The Mag 7, even weaker, pretty much sold off all day. We just got a pop. We did not exceed the previous high. We sold off again. It's just, can we finally see a higher low? From a technical perspective, not the craziest thing for us to bounce here. I'm praying for the double bottom. But when it comes to trading, praying is probably not your best technique. So I'm hoping that this recent low can actually hold, and I'm hoping that this recent high, we can actually get the breakout above, and maybe we can, maybe we can't. I don't know. I'm hoping. I'm hopeful. All right, what's going on? 5 minute is bearish, 10 minute is testing, 30 minutes testing, 4 hour is bearish, and we almost have an engulfing channel or candle. 5 minutes bearish, 10 minutes bearish, 30 minute was testing, got rejected, and now that's actually still bearish. So momentum not looking the best at the moment. We're in the transition zone, which is a pain in the ass zone to trade in. It's just choppy because market makers just don't really feel the need to have the most influence in this zone. So I'm looking for the break above 25 and the return to 50. If you're bearish, you're looking for the breakdown of 600 and the push to 75. So bull case, bear case, I'm not telling you which way to play it. I'm just letting you know if I had to play it in those specific directions, that's how I would do it. And personally, I am currently playing it to the upside, but that's not because of a day trade. It's because of a position I've had since yesterday. And we're seeing actually at this point a lot of gamma pinning. Tesla just got a bid. After getting hit all morning, we just saw a pop on that delta. Interesting. I wonder if there's going to be follow through there. Okay, folks, that's pretty much it for the Friday. I'm Vanquish. Shout out to them. Remember, next week, we're going to be able to give away more accounts if you guys keep using this code Goonie on Apex. The reason I'm bringing it up today is because it says 4 days left, which means you really only have 2 days because Saturday and Sunday and today. So really you have 1 day left because 2 of these days are going to be weekend days. But the reason I'm bringing it up because it's not just 80% off. The fee to go from eval to funded is now cheaper. Instead of being 140, it's like 80, 85, something like that. So a pretty decent percentage discount. And I have a feeling that enough of you guys are going to take advantage of this deal that we'll be able to give away some Apex accounts next week. So that's looking pretty good over here. Shout out to everyone who participated. I took the screenshot. I have all your names. I will be giving you guys, I guess, the information to get the account, and Vanquish will be DMing you. So if you are Charlie Moon, A1 Perception, Elon Muskie, Dark Magadad, or Jay Keith, please make sure you are following Vanquish so they can reach out to you and give you the account. And also A1 Perception, I will be reaching out to you to also get your details to send you your money today, so you can have some fun at the bar this weekend on me. On me. Now, before I let you guys go to enjoy the start of your weekend, do you have any last second questions, comments, concerns? Do you have questions about Vanquish? Do you have questions about Apex? Do you have questions about Spot Gamma? Do you have questions about the Goonie Trading Discord? Do you have questions about Gamma levels? Do you have questions about futures? Do you have questions about systematic trading? Do you have questions about Buffalo shirts? Do you have questions about where do babies come from? What questions are on your mind? This is your opportunity to let it rip. This is your opportunity to let it rip. Are you swinging the calls over the weekend? The honest answer is I don't know. It depends on where the market's at. I always attempt to try to take in as much data as I can. So if I made that decision now, I'm literally missing 5 hours worth of data. So the people who are going to know that as of 4 p.m. are the people in the Discord. When are you going to hang up the Piper painting? I don't know, because I like it down here. And when I film the other videos, it's shown off. So I don't really know the right height because half the time it is there. What EMAs do you use? Oh, I use like 4 or 5. I use an EMA cloud. I want to know the faster ones, such as a 10. And I want to know all the way the slower ones, like the 50. Buffalo shirts for sure. Why do you keep cursing Mateo? Probably because I didn't get enough attention as a child. Why do you use copy trades from multiple accounts? Because it's scale. It's hyper scalable then. What are your monthly expenses? Oh, my credit card bill per month is from my evals, from my just businesses, my data feeds. My credit card's probably around 30K a month for the business. Actually, for my business and my life, because like my business is like, it's all kind of together. About, I don't know, 30K. Some months it gets a little crazy. Some months are a little bit quieter. But like by the time you buy all the evals, sometimes I need to buy flights to go to whatever, California, Vegas, Florida. I have to buy a flight to go to Europe. Like, it's not that I have an employee I have to pay, like, yeah, I don't know, about 30K. The speed velocity of an African antelope, about 54 miles per hour. I don't know the conversion to kilometers, but probably about 54 miles per hour. About, roughly. Actually, now I kind of want to look it up. Dude, imagine if I'm right on this. Imagine if it is 54 miles per hour. No way. That's a pretty good guess. 56 off by 2 miles per hour. Like, come on, folks. That's a pretty... I'm off by 2 miles per... I bet there are African antelopes out there who only can run at 54. So, like, some of them, that's right. And also, why is it trying to tell me about the hypotenuse over here? Pretty spot on. Pretty freaking spot on, if I do say so myself. What is the Celsius to Fahrenheit formula? Okay, let's see if I can remember this. You multiply by 5 nines and you add 32. Or do you multiply by 9/5? You multiply by 9/5. You take the temperature in Celsius, you multiply that basically by 2, but really the formula is 9/5, and you add 32. I believe that's what it is. Yeah, so the rule of thumb is just double it and then add 32, but I believe the exact formula is you multiply it by 9, divide it by 5, and then add 32. Is that the question we want to leave it on? That's been a while since I've had to use that. I usually just double it and add 32. That's generally my math. Ryder Cup winner, dude, gotta go USA. Gotta go USA. The Ryder Cup I find to be fascinating, and I'm not much of a golfer, but geez, I think it's a really cool competition. Have you considered bison leather boots to go with your lucky shirt? I haven't, but now I am. Now that you've said that, I didn't know that was an option, but now I'm here. How low is open going to go? Eventually probably back below $1. Florida State or Virginia? Ooh. Probably Florida State. Probably Florida State. If I had to guess. I'm looking for Tesla to keep going. I'm looking for this to be the double bottom in here. The next time my strategy can trade isn't until literally this afternoon. So it's pretty much going to be, I'm leaving you guys here. So I made $500+ per futures account. On Vanquish, I made 1,500. And in terms of my swing accounts, I haven't closed anything out. So I don't know. I don't know. But folks, that is what I have for you. I appreciate all the good vibes. We've had a great week. I hope you're having a great day. Whatever money you've made, I hope you make a fuckload more before the market closes. I hope you have a great weekend. I hope you get to party and rage and have fun. Or maybe that's not your thing. Maybe you just want to sit in a room and meditate and not talk to anyone. Regardless of what you do, I hope it's exactly what you want to do. I hope you guys have a great weekend. We'll be posting an update video on Sunday. We'll be then streaming again on Monday. And if you want to hang out in the meantime, that's exactly what the Gooning Trading Discord is for. And remember, the first month is free. And in the meantime, don't forget to get yourself a Buffalo shirt. That's what I have for you. I appreciate all the good vibes. I love you all. I hope you have a phenomenal weekend. Peace.